On reports that Hong Kong will lock down tens of thousands of residents for the first time. Matt?
Take a look at the futures just before the open. We've seen them pointing down all morning. U.S. futures off as well on concern about increased coronavirus restrictions, never-ending coronavirus restrictions around the world. You can see Euro Stoxx 50 futures right now down about 2/3%, but the FTSE futures aren't down quite as much. FTSE opens up off about 0.1%, and we did have bigger drops in European continental futures, so you could see bigger drops on the CAC, the DAX, the IBEX, etc. They take a little bit longer to open up than the FTSE 100, which is right now moving lower, down 0.3%. But here we see the CAC now down 0.4%, and the IBEX down 0.7, almost 0.75%. So European equity indexes opening to the downside as global stocks dip from all-time highs. Restrictions to curb escalating COVID infections have dented some of the optimism around earnings and the prospect of additional stimulus. Joining us now to talk more about that is Jeff Yu, BNY Mellon Senior Strategist for EMEA Markets. Jeff, we knew it was bad, right? But things are getting better. I mean, are getting worse, I should say. When I read that the UK was warning of lockdowns into the summer, it just really depressed me this morning. Is that how markets are reacting?
I think markets are just reacting, noting that there had been hope that vaccinations and a good speed of vaccinations would have been able to accelerate reflation, but that's been proven not to be the case. Quite a few aspects there. Firstly, if you look at the Eurozone, the European Union, many of the countries are really falling behind and not as strong as perhaps we had hoped. If you look at Asia, new lockdowns, and there seems to be a lack of a vaccination strategy at all. UK is certainly better than expected, but UK alone is not enough to push things forward, especially given the UK is a global economy linked to the rest of the world. US, the jury's still out there. Stimulus may take time, but there is a stronger vaccination plan now. So really more misses than hits so far at the beginning of the year. I think that's why markets are somewhat choppy.
Yeah, certainly the market's preoccupied with concerns around lockdown. Although I will say on the UK story, it seemed as if the government just didn't want to enter into a conversation about summer when asked about it yesterday. Refused to rule out, I suppose, lockdowns till summer, rather than deliberately warning about that, wanting very much to focus on the here and now. And thinking about the here and now, Jeff, it's interesting to see Hong Kong having to take these tougher measures at this point, part of China, lockdown, as we know, to fight a resurgence of the virus there. Is any of this enough to change the market narrative, the market's assessment of Asia exposure, of Chinese exposure, given that the Chinese had did such a good job of eradicating this virus in the early days?
I think over medium to longer term, or even just over the medium term, I don't think it will. Of course, there is a risk that given the timelines, we do have Lunar New Year holidays coming up in Asia, and there's a lot of travel between the provinces in China. So I think there's a concern that we may repeat last year, whereby you still have the virus spreading around, and due to the traveling all over the country, that could cause a wider spread. I don't think expectations this time around are for that to happen, but clearly there is a risk. But most importantly, it's not Chinese allocation, so allocating to Chinese assets. It's your Germany's, your France, or Europe, which has seen stronger manufacturing numbers based on stronger Chinese demand. If that comes off, even so slightly at this point, it's the only source of growth right now. So I think that is contributing to weaker sentiment as well. We've seen the higher manufacturing PMIs in Germany, for example. If that starts to come off due to softer Asia growth, that could be a problem as well.
There is so much optimism, Jeff, for the other side of this, even if it isn't until, the end of the summer or the end of the year, because at least partly of the pent-up savings. People are ready to pounce. They're ready to buy airplane tickets and go to faraway destinations and get expensive hotels and spend money, at least those who haven't lost their jobs. Do you think that's uniform across markets? I mean, is the U.S. just as good a recovery bet as the EU?
I don't think it's as uniform across markets, and really it depends on two or three things. So firstly, what is the consistency of fiscal stimulus? So I think that's where on the EU side, governments have been very, very strong in pledging income support. In the US, it's been stop-start, whereas here in the UK, we're actually talking about more fiscal consolidation. So that actually sets the UK apart. Secondly, yes, you talk about more savings. That clearly is in play, especially in the UK and in the US, where savings rates actually surged above German savings rates. But how much of that is going to be released? It's not one for one, right? It doesn't mean savings rates are going to go from plus 20% back down to low single digits in the UK or in the US due to consumption. And thirdly, that K-shaped recovery we talked about, it's not going to be uniform within individual countries. Those with incomes, with jobs, as you mentioned, they probably can spend, they can release the pent-up demand. But for those on lower incomes, I don't think that's going to be as forthcoming. So governments need to be attuned to that as well, because it brings in certain political dimensions.
Let me ask you a bit more about the dollar then, Jeff. All of this said about where the US is in terms of its recovery story and the virus globally. Jeff, just wanted to ask you about the dollar, where you see the dollar heading. We've heard from Janet Yellen, of course, this week. No strong dollar policy being mentioned, but equally talking about how the markets need to set the rate for the dollar. Where do you see the dollar heading?
I'm not sure.
Looks as if we've lost
Jeff, can you hear me? Or have we both lost you? All right, well, listen, the good news is, because he is one of my favorite guests, I have to say, the good news is we have a commercial break between us and hopefully getting Jeff back on again, right, Anna? Because we will, I assume, redial and try and get him back on the line and hear more from Jeff, you at BNY Mellon. Christine Lagarde says the Eurozone is headed for a double-dip recession. I don't know why I say that with so much enthusiasm, because it's a bummer as well. Another bummer from a central banker. Up next, we'll discuss the latest from the ECB. This is Bloomberg.
the risks surrounding the euro area growth outlook remained tilted to the downside, but less pronounced.
That was the ECB President Christine Lagarde there, signalling that the Eurozone economy is headed for a double-dip recession. Let's get back to our conversation with Jeff Yu, who can now hear us, BNY Mellon, Senior Strategist for EMEA Markets. I just want to finish off our conversation on the dollar, actually. I mean, Janet Yellen appearing earlier this week, no strong dollar policy talk of setting the dollar through markets, as you would expect. But I wonder where you expect the dollar to go from here.
I think the broader asset allocation strategy to maintain the dollar on a defensive footing, that is still sound. I mean, even if we do have new trends such as pushing forward for fiscal stimulus, the intrinsic drive behind that from the Fed is still to keep financial conditions very, very loose, and a weaker dollar is going to be part of that story. We think real rates in the US and the growth in that is going to be very, very slow, whereby in emerging markets, I mean, current growth bumps are notwithstanding, that asset allocation strategy can still be maintained as well. I think the big question right now are pairs like euro dollar, cable even, because we entered the year being very positive on the euro, especially with the NGEU investment plan. That really set Europe apart. But the vaccination strategy, that really is, or lack of, that really is dampening sentiment right now. So more confident on Asia, on an EM performance against dollar. The carry trade still should recover. Euro dollar right now probably going to be going to the range.
Before we leave the U.S. story, I got to ask you about your expectations in Washington. The market has priced in a lot of optimism around Biden's spending plan, but it looks like he's going to run into filibusters and get nothing through other than, you know, stuffing it into reconciliation bills. So what can we expect in terms of the stimulus?
I think stimulus right now is less about size and scope. It's going to be more about timing. So markets who are looking for an early boost, a strong push into Q2, for example. I think that's where expectations need to be checked up a bit. Realistically, the reconciliation route is probably going to be the most likely one. So any proper reflation wave, that pricing probably will need to come later in the year. But the onus is on the rest of the world to recover in the meantime, the areas with the strong fiscal push. Like I said, Europe, that's in place. Asia does have capacity, but right now it's more vaccination rates. That differentials, that really is putting a damper on things.
What did you make yesterday of the press conference from Christine Lagarde, Jeffrey? We heard that the ECB officials have asked staff to propose new ways of measuring financial conditions in the euro area to try and assist future decision making to work out how best and how much to stimulate the eurozone economy.
I think that is a step towards much more targeted stimulus, because if you look at areas of which are needed in the Eurozone, especially on the corporate side, I think that's where they want to measure how can corporates be best helped, how can financial conditions within specific sectors be eased the most, because broad brush being negative rates or quantitative easing, the marginal effect is going to be increasingly limited at this point, because your starting point is so low. You have negative rates already, years of stimulus. So where do we go from there? So I think they are looking at more targeted measures, but overall, complementing the NGEU investment plan, that's the best way the ECB can push things forward. One thing personally I'm looking at, green bonds, buying green bonds to target stimulus the green economy. That's in line with EU plans. I think we'll hear a lot more about that heading later into the year.
What about things you wouldn't touch with a 10-foot pole, Jeff? And I'm thinking about the banks that have had such a hard time, especially here in Europe. Will they continue to be difficult?
I think so for yield curve related strategies, that really will be difficult. If we look at even before the press conference yesterday, the direction of travel in the Eurozone seemed to be yield curve control. So I wouldn't take that off the table. And Madame Lagarde yesterday certainly did not rule that out. They might not want to talk about it that much, but if that is still the direction of travel, then for the financial sector in Europe, for industries that need a proper yield curve as a reflation play and to really shake up their earnings, that's not going to be forthcoming anytime soon. So the greater risk is if you think that Europe is going down the way of Japan in terms of policy, but also in terms of structural growth, then there will be issues up ahead for the sectors which are exposed.
We had been worrying about strength in the euro. I spoke to one guest from UniCredit yesterday, Jeff, who said it's not really that strong. I don't really know why the ECB are talking about it so much. What do you think about the euro battle that the ECB is facing?
Well, it's not strong, but it's not at 108 either, right? Barely 6 months ago, that was the assumption. At the end of the day, it's more about the pace of appreciation rather than levels. I think if we had euro dollar at 125, 126 heading into this ECB decision, the conversation would have been a lot more different. The language would have been stronger. So at these levels, the ECB has a lot of room. But if, let's say, for positive reasons, we surge through 125 within the quarter, then the ECB will certainly push back against that as well. They just want to manage the pace. If it's above 125, even closer to 130, by the end of the year, I don't think the ECB will have an issue with that.
All right, Jeff, thanks so much for joining us. Appreciate you coming on the program and sticking with us through those technical difficulties. Jeff Yu, BNY Mellon Senior Strategist for EMEA Markets. He's going to continue the conversation, by the way, with Anna and myself on Bloomberg Radio. That's at 9 a.m. UK time. So if you're in the city, tune in on London DAB Digital Radio. Anywhere else on the world, you can just Google Bloomberg Radio and click Listen Live. I highly recommend it. Let's get over to Laura right now for the Bloomberg Business Flash. Laura?
Thanks, Matt. Siemens says its earnings beat by a wide margin on demand from China. Two of its main business units rose unexpectedly: digital industries and smart infrastructure. Growth in China has been a key support to some of Germany's biggest exporters, and Siemens has weathered the pandemic better than many rivals. Pay at Wall Street's biggest banks is rising much slower than revenue. Goldman Sachs generated an extra 15% per employee, but only spent 2% more. The gap was even wider at JP Morgan. Revenue up 22% per person. Pay was up only 1%. The firm also kept boss JB Diamond's compensation steady at $31.5 million. Bitcoin briefly dropped below $30,000 earlier, raising fresh questions about the cryptocurrency boom. The digital coin is down from an all-time high set just 2 weeks ago, heading for one of its worst runs since the pandemic began. Commentators are warning a sustained drop below 30,000 could lead to more losses. That's the Bloomberg Business Flash. Matt, Anna.
Laura, thanks very much. Laura Wright here in London. 17 minutes past 8 here in London. Coming up on the programme, though, we'll get back to Hong Kong. The Hang Seng slumps on reports that Hong Kong will lock down tens of thousands of residents for the first time. As Matt said earlier, there are lockdowns and there are lockdowns. We'll get all the details next. This is Bloomberg.
Welcome back to the Open. We are 20 minutes into the session right now, looking at losses of about 0.9% on the broader stocks 600 European equity index. In terms of the individual sectors that are weighing the most heavily on the index, you can see here the stock 600 travel and leisure sector, which makes sense if you're worried about continued and extended lockdowns. And then the autos index is also moving lower, more than 1.6%. Stocks in Hong Kong slumped following local media reports the government will lock down tens of thousands of residents for the first time in an effort to limit the spread of the coronavirus. Joining us from Hong Kong is Bloomberg's Xinshan Hong. Xinshan, thanks so much for coming on the program. Tell us about what kind of lockdown we're talking about, because I know people in Hong Kong have been taking precautions for the entire year. But what's the story with this lockdown, and what's the area the government is looking at?
Yeah, actually, this is the first time government is considering doing a lockdown, according to local media report, because Hong Kong is like really small and we all live in very small apartments. A lot of people don't even have proper conditions to cook at home. So it has been very difficult for the government to take such a drastic approach. So over the last year, even if cases went even higher than where we are right now, the government never did something like this. But now that we are seeing maybe from this weekend, the core urban area of Kowloon, which is called Yaoqing Mall, will be locked down, then this is something that like really takes us to another stage of Hong Kong's virus control.
Okay, so this is a step up then. This is a tougher lockdown than we've seen in the past in Hong Kong. What could be the impact of this?
Yeah, so actually, if we compare this lockdown to mainland China's lockdown, it's not that strict because local media says if you have negative virus tests, you can go out of the region. While like if in mainland China, for example, you can't go anywhere, even in like locked inside your apartment. So this is something we are seeing. It will be very impactful for a lot of low-income families living in that region. They are already suffering under economic contraction. So right now they will be like also targeted because the buildings they live in have poorer conditions that the government wants to inspect further. And then also there will be impact because Hong Kong is about to start its virus vaccine rollout next month. Right now we are all seeing whether citizens will be willing to step out and take the vaccine. So right now this like more drastic approach is coming to the city. It will really, we really need to see whether it changes the sentiment.
Okay, thanks very much. Xinshan Hong from Hong Kong joining us there with the latest on what's happening in that part of the world with regards to fighting the virus. Now, Wall Street may have hauled in a windfall, but the rewards for traders may be more modest. On average, the largest US banks boosted average pay by $271 per employee, even as overall revenue soared. Joining us now for more, Bloomberg's Danny Berger. Danny, why hasn't pay moved very much then at these banks, despite the successes that many of them have had?
And one of the biggest reasons is optics. Optics for lawmakers and really optics throughout the rest of the bank. On one hand, you have this very large disparity emerging, not just throughout the world, but the U.S. as well. So it doesn't look great, especially with a new guard in Washington, to be giving your workers this huge pay increase when so many people are struggling, and they, of course, want to avoid that sort of scrutiny. At the same time, just because of the Wall Street portion of these lenders did well in terms of markets, capital markets, and trading, other parts of the banks did struggle. For example, lending did not do as well. So for that reason, we see this average overall pay number look very disconnected from the growth. For example, Goldman Sachs, 15% increase in revenue year over year, only a 2% increase in pay. JP Morgan, the disparity is even bigger. It's 22% for revenue increase versus just 1% for that pay. And so again, it is just this, it's just the environment where there's a crisis, and it doesn't look great to be paying your traders that much more money.
If that's overall pay, what about the top rainmakers, the big executives who get the multi-million-dollar checks? Is their pay also stalled?
So from what we've learned so far, we have seen some of those pays stalling. JP Morgan, for example, keeping Jamie Dimon's pay flat. We should get more of those executives' figures in the coming months, usually get them around the end of January. We are expecting, though, some of the top rainmakers to continue to get a pay increase. Companies vocalize this on their call, saying that, look, we want to be able to retain talent, and retaining that talent means paying them well. But we have seen other companies like Citi, for example, say that they're going to slash back pay for their top executives, sources tell us. That has more to do with some regulatory issues, but it just does show a willingness to cut back on pay even at the top.
Thanks very much, Danny, for bringing us the story. Danny Berger with the latest on pay in the banking sector. 25 minutes into our trading session here in Europe. Let's have a look at where we are on some key movers this morning. The industrial giant Siemens saying that earnings beat by a wide margin on China growth, and you can see that that stock is up by some 5% this morning. TUI under considerable pressure, down by around 11%. Negativity on European lockdowns is something that's been affecting other stocks in that sector, but TUI is sort of the poster child for it, I suppose. But we're down by more than 3% on EasyJet and by IAG and on IAG. So there's broad concern around the extent, the duration of these lockdowns, certainly in the UK and elsewhere in Europe. We're also focused on the auto sector as well. They've got the auto sector in there for you, down by around 1.7%. Right now, one of the worst performing sectors in Europe. Now, EU leaders paint a grim picture, as we've been saying, as they warn on tougher lockdowns. Up next, we discuss with Susie Dennison from the European Council on Foreign Relations. This is Bloomberg. Welcome back to the European Market Open. 30 minutes into the European trading session. Let's have a look at where we are. We seem to be losing steam in what's been a fairly strong week for global equities. It's inauguration week. We focus very much on the blue wave, on fiscal spending in the United States. That theme had continued earlier on this week, but in the latter part of this week, certainly today, fear about further lockdown in Europe or extended lockdowns in Europe and further lockdowns in parts of Asia, or really starting to permeate the market thinking. And that's what we seem to be seeing weighing on stocks. You can see all sectors in negative territory: autos and auto parts, energy, travel and leisure, all of those to the downside the most. As you can see, some of those down by more than 1% in this morning's session. Just a bit of data out of Germany. We've already had French PMI data. Here's the German numbers for you. So January manufacturing PMI coming in at 57, so very much in expansion territory. The forecast was a similar number. Services PMI falling to 46.8. The forecast was for 45. So perhaps a little better than anticipated on services, but still in contraction territory on services. And that was similar to the French number. The French number showing expansion in manufacturing, contraction in services, as you might expect, given the extensive lockdown measures we've seen put in place in various parts of Europe. Let's get a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. The UK is warning it's too early to think about easing the nation's third lockdown. Prime Minister Boris Johnson is telling people to be prepared for a tough few weeks ahead, dropping a pledge for the UK to return to normal by April. The government is enhancing enforcement of the virus rules and is not ruling out the lockdown lasting until summer. The Biden administration is planning a bipartisan meeting to discuss its COVID-19 relief plan. The $1.9 trillion price tag is drawing widening opposition from Republican lawmakers. Bloomberg sources say Brian Deese, President Biden's chief economic advisor, will meet with the group in the next week or so. The US top infectious disease expert Anthony Fauci says he feels liberated by working for President Biden after President Trump tried to sideline him. Speaking at a White House briefing, the new administration's chief medical advisor said it felt uncomfortable to have to contradict the previous president over medical advice, saying he took no pleasure in it at all. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Matt, Anna.
Laura, thanks very much. Laura right there with your first word news. Now, Europe is grappling again with rising numbers of COVID infections and deaths. In a video call, EU leaders painted a bleak picture of the healthcare emergency across the continent, and they warned that variants could prolong lockdowns.
It would be totally incorrect to infer now that we still had all the time in the world to deal with this. We have to deal with this now, and this moved not only me today, but all of us in our discussions.
Joining us now to discuss is Susie Dennison, European Council on Foreign Relations Senior Policy Fellow. Susie, thanks so much for joining us. Let me ask you first about this vaccine. You know, I keep hearing officials say they want to accelerate vaccine production or make sure that pharmaceutical companies meet their commitments, but aren't they already producing as much as they possibly can, as quickly as they can as well?
I mean, I think that what European leaders are dealing with at the moment is a sort of a twin pressure to ensure that the vaccine rolls out as quickly and effectively as possible at national level, and as national governments, they're dealing with that. But at the same time, ensuring that the national efforts are not at the cost of the collective European and indeed further international vaccine use, because I think that there's a very clear acceptance among European leaders that given the interconnectedness of European markets and how close we live together as Europeans, that there is a need for this to operate effectively at European level and for measures to be taken in lockstep. So I think that what we've seen around the meeting table is the different perspectives from council leaders, those countries which which are particularly under pressure at the moment with high levels of the disease, like Belgium, calling for revisiting the idea of national border closures within Europe, more restrictions on travel within Europe, against those countries who are really concerned about the economic effects of not being able to travel. So good example here is Greece, who are pushing this idea of a vaccine passport that would allow us to restart more movement within Europe for trade, for tourism, for other reasons. And I think these tensions are really being felt around the council table now.
What do you think is the thinking around ideas of passports, vaccine passports, for example? And I use the word passport loosely because it can mean different things in different settings. Are we talking, we're not always talking about something that allows you to take an aeroplane and fly to another country. We might be talking about something that allows you access to your local coffee shop, and the response and the thinking and the legal backdrop to those things might be very different, Susie. So how is this conversation evolving?
Yeah, I mean, I think it is evolving differently in different member states because the debate around this is very different. Here in France, where I'm talking to you from, there's a very tense discussion around the idea of a passport because it's closely linked to the idea of the vaccine effectively becoming mandatory if this is the way that you access services and the public domain, and therefore the notion of the sort of the more comprehensive form of passport that you've described is sort of anathema here in France. But I think the discussion at council level is more about the need not to close national borders because a number of member states have been very nervous about this idea because in the first confinement, in the first wave of coronavirus that we saw in the spring of this year, there was a lot of criticism for the way in which European states acted unilaterally, leading to basically a sort of a breakdown in movement and communications across the EU for a number of weeks in March, April. That's all got a lot better now with that communication. So I think that the idea of a passport is to precisely avoid a repeat of what we saw in the spring.
And on that subject of sort of freedom of movement and an ability to travel from one European country to another, clearly that becomes very political. Is there a sense that is there any sense, any way that the politics can be taken out of this? I'm thinking of other large bodies of land that put in place barriers that are not between nations, but just to simply stop the flow. So, for example, in Australia, they close state borders when they want to stop people from travelling from one part of Australia to another. And I mean, I'm sure many Australians don't like it, but it doesn't necessarily generate quite the same fears around freedom of movement. Is
well,
there
here you can only drive
forward
15 kilometers away from your home, Anna.
Right. Okay. So it's sort of solved for you in that sense in Germany, Susie.
Exactly, no, and I think that our tolerance as citizens for these kinds of controls has obviously sort of grown over the last year because, as Matt rightly points out, the borders haven't just been sort of national in this context. Here in France, during the first confinement, you had restrictions on the number of kilometres that you were allowed to move, and I think that's also the case in a number of other countries now. So I think there is indeed an acceptance of this need for these kinds of measures, and when we did public opinion polling at ECFR with YouGov in the spring of this year on sort of how Europeans' thinking had changed after COVID, when we asked what measures they've become more tolerant of as a result of this experience, the top answer was actually greater use of border control as a tool. So I think that clearly that is there. But at the same time, I think we've also seen a growing acceptance of the European space as being the most practical level to handle this pandemic and the control of that, both in terms of ensuring supply chains for essential goods, both for health purposes, but also other critical supplies, that there's been an acceptance of the need to look at that more at European level. You know, when we asked how Europe should change after the crisis, the top answer was actually the ability to work together on global challenges. So I think that there is a desire, a recognition of the need for this to be a European, not national level response, because ultimately none of the national borders kind of really mean very much anymore in terms of the way that trade works, the way that connectivity works within Europe. So yeah, I think that border control as a tool, definitely there's support for it, but I think that that's not necessarily linked to an idea of a national response.
Well, in testing, I mean, the borders don't really matter, right, Susie? As long as you can test everyone quickly, or if their test is relatively recent, that should already be a prerequisite for going from one place to another. And maybe we'll see that kind of passport, I'm doing air quotes, because, you know, it could be a bracelet or some other form of identification. Susie, I hope we get you back on. Pleasure having you on the program. Thanks so much for joining us this morning. Susie Dennison, European Council on Foreign Relations Senior Policy Fellow. Now, coming up, runway to recovery. Could the airline industry bounce back more quickly than expected? If you think so, today is a great day to buy those stocks. Domhnall Slattery, CEO of aircraft lessor Avalon, is up next, one of the biggest in the world. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open, almost 45 minutes into the session, and we're looking at red arrows across indexes as investors grow increasingly worried about extended and deeper lockdowns. Let's get the Bloomberg Business Flash right now. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. Citigroup is making gradual progress on narrowing its gender pay gap. Women now make up 26% less than men, a 1 percentage point improvement from a year ago. In the US, minorities still earn 6% less than non-minorities, similar to last year. The bank is one of the few companies to actually give detailed statistics on its pay gaps. Siemens says its earnings beat by a wide margin on demand from China. Two of its main business units rose unexpectedly: digital industries and smart infrastructure. Growth in China has been a key support to some of Germany's biggest exporters, and Siemens has weathered the pandemic better than many rivals. Google is threatening to disable its search engine in Australia if it's forced to pay local publishers for news. It's a dramatic escalation of a months-long standoff with the government. Google says the proposed new rule is unworkable, but Prime Minister Scott Morrison is hitting back, saying Australia makes its own laws. That's the Bloomberg Business Flash. Matt, Anna.
Laura, thank you. Laura Wright here in London. 2020 was the toughest year ever for the commercial aviation industry, but could the recovery in 2021 come more quickly than expected, or could it be delayed by the more recent lockdown measures? Aircraft lessor Avalon is with us to discuss, and let's bring in the company's CEO, Donal Slattery. Very good to speak to you, Donal. Thank you very much for joining us. So given the recent return to restrictions, stepping up of restrictions, lockdown 3 here in London where I find myself, plenty of other examples across the world of further lockdown measures being taken, how far out have you had to push your recovery thinking?
Well, the baseline for the industry, which has been effectively outlined by IATA, is a full recovery by 2024. And we felt comfortable with that as a forecast up to a couple of months ago. But with the advent of the vaccine, even given the current lockdown scenarios, we think that recovery could accelerate. And we're thinking now of 2021 as like 2020 in reverse.
So you think it's going to recover just like, I guess, a V. What about what customers want from you now, Donal? I mean, are they asking for deferrals of lease payments? Are they asking for payment holidays? Are they asking for contractual breaks?
Yeah, so Matt, I don't think it's going to be a V. I think it will be a steady recovery, but I think the recovery kicks in earlier than we anticipate in terms of the demand, and I think that starts in the second half of this year. In terms of what our customers have needed in terms of support, as far back as March of last year, airlines' cash flow diminished to almost zero overnight. And we had to step in as a key stakeholder in the food chain to support them. And we were able to do that because of the liquidity that we carried on our balance sheet. So we were almost a buffer in that cash liquidity. So all of the above really is what we've been dealing with in terms of asks from the airlines, whether it's deferrals of rentals, forgiveness of rentals for periods of time, cancellations or delays of aircraft in terms of deliveries. So it's been the whole smorgasbord, if you like. And we've been supporting, we have 160 clients around the world. The vast majority in one form or another has needed some support, and some continue to need support.
Okay, so you're talking to your customers about that. You say that the second half of this year is going to be key in terms of starting that recovery. Where does that leave, thinking about Europe, where does that leave summer 2021? Is summer 2021 going to be something of a washout, just like last year's, or are we going to see substantial return to business by that point?
I'm not sure. I think summer 2021 in Europe is uncertain, and it's ultimately driven by the pace of the rollout in Europe. So my gut feeling is that it won't be a busy summer on the airline side. Certainly the first half of the summer, so the May, June, up until mid-July time frame. But perhaps in the latter part of the summer, as the vaccine metrics start to really kick in, you know, the pent-up demand, Anna, globally for people who want to get on aircraft, to see friends and family, to take a break, just to get away from the humdrum of Zoom calls is enormous. And of course, people have been saving a lot of money. And so there's plenty disposable income to buy airline tickets, go to that hotel destination you always wanted to go to. So I think when people can, they're going to get on those airplanes in droves.
Yeah, I'm really hoping that I'll be able to get to Mauritius by the end of April. Donal, what do you think about demand for actual aircraft from the big two, Airbus and Boeing? Are they going to have to cut production this year?
So look, I think that's the big question, Matt. The reality is there is excess supply of aircraft in the world market today. Several thousand are currently parked, not being used. And they will slowly come back into the system as recovery kicks in, with the younger aircraft first. And it's quite likely that a lot of aircraft will never return because of their age. In my opinion, and we've communicated this very clearly to both Airbus and Boeing and the engine manufacturers, because it's an entire food chain, they should be in no rush to pick up production levels. And we saw overnight that Airbus have indicated they're going to maybe taper back their expected forecast from 47 aircraft to 45. I think that's good. I would encourage them to even taper it back to the current levels of 40. It's going to take the supply-demand dynamic for aircraft several years to get back into equilibrium. Even though the demand for people to get on aircraft kicks off in the second half of the year, there is a lag factor.
All right, Donal, appreciate your time. Great to get your insight. Donal Slattery there is the CEO of Avalon Holdings. They are one of the biggest aircraft lessors in the entire world, so a key voice on this industry. Today, we're asking the question on the MLive blog, how would less dovish policy affect assets? We'll put that to MLive's Laura Cooper, find out what client responses have been as well. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. We are 53 minutes into the trading day right now and looking at some red arrows across equity indexes on concern about the worsening virus situation and the deepening and extending lockdowns. What are we watching today? Well, let me tell you. At 9 a.m. UK time, we're going to be watching for Euro area PMI data. We've already seen a bunch of data coming out, including Germany's PMIs. The survey is likely to have retreated in January as a result of, clearly, of the tighter restrictions, and we could observe a similar pattern in the UK's PMI, which will be out at 9:30 a.m. It comes out after the European data. At 10:30 a.m. in the U.S., the EIA publishes its weekly crude oil inventory report, or inventory, as Anna would likely say. And then on Saturday, it'll be 1 year since Chinese authorities put the city of Wuhan under lockdown. And it feels like it's been 10. But yes.
Feels like a lifetime.
The 1 year anniversary. It doesn't it? I mean, I feel like 2021 has lasted a long, long time already. And it's only the 22nd today, so.
It does feel like
With
a lifetime.
that,
I'd
let's
say
bring in Laura
inventory,
Cooper.
but I'm sure nobody cares. And let's get to Laura Cooper, Bloomberg Markets Live macro strategist. Laura, before we, a much more serious note, before we get to you, I should just mention a Hong Kong health official has said that they won't comment on lockdown speculation, but it is that speculation about the extent of lockdown needed in Hong Kong that seems to be moving markets at the moment. Do we have Laura? I'm not sure we do.
Is Laura there?
I can't hear Laura.
Have we dropped
I can't hear
her?
Laura Cooper right now, so perhaps she's not there, Matt. But interesting to see that this
lately, hasn't she?
Hong Kong health official makes this comment because it is this story that was emanating out of local media in Hong Kong that was weighing on the Hang Seng, and all the way through the night we've been sort of tracking that conversation. The Hang Seng now down by around 1.6%.
Yeah, absolutely. But to be fair, when you look at the Hang Seng Index, if you take a look, for example, at a 1 year chart of the Hang Seng, it goes up like Al Gore's hockey stick over the last few days and weeks. So it's definitely due for a breather if any index was. And of course, the first lockdown, that's very procedural because they have been staying in their homes, working from home a lot, not going out to restaurants for a large part of the year already. So you have to wonder how much it's really going to hit the economy and how much this is just an excuse for investors. On the other hand, the fact that the UK could be locked down until the summer, I find just a very depressing
or at least when asked about that, the government didn't choose to push back against it. It was interesting to have that conversation with the aviation sector just a moment ago about whether we'd be able to fly anywhere by the summer, and he puts it at the second half of the year, which leaves it awkward, doesn't it, with for anybody who's trying to think about whether they book that summer vacation. Matt, we're off to radio here on Bloomberg TV. Surveillance is up next. This is Bloomberg.
The dark winter of the pandemic, Joe Biden says he will move heaven and to earth to vaccinate 100 million Americans in the next 100 days, but warns that 100,000 may die in the next month from COVID. A last resort, Angela Merkel warns that Germany could close its borders as EU leaders say stricter lockdowns could be necessary. And Bitcoin steadies after a slump that raises fresh questions about the sustainability of the crypto boom. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, it's been quite a momentous and historic week. So we'll look at some of the Biden policies, exactly what that means, not only for the world, but also for foreign policy, for domestic policy, maybe for healthcare, and, of course, for climate change. A quick look at the markets, because we did have a bit of movement on the back of what Christine Lagarde yesterday of the ECB said. We watched with interest that press conference. Nothing huge, apart from the fact that actually when you look at the trajectory for growth in Europe, it seemed to be pretty much in line with the market's expectations. Now, today's stocks actually stumbling. They're dipping as U.S. futures are because of more restrictions that could come in place to curb this escalating coronavirus cases. And it's really denting some of the optimism that we saw over earnings and also over plans for more additional stimulus. The dollar edging higher. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. European leaders are warning rising virus numbers mean the continent will likely be in lockdown for longer. They used a video call to demand drug companies ramp up production and deliver more jabs. And they're calling on people to avoid non-essential travel, even within countries. Now, the UK is warning it's too early to think about easing the nation's third lockdown. Prime Minister Boris Johnson is telling people to be prepared for a tough few weeks ahead, dropping a pledge for the UK to return to normal by April. The government is enhancing enforcement of the virus rules and isn't ruling out the lockdown lasting into the summer. And the Biden administration is planning a bipartisan meeting to discuss its COVID-19 relief plan. The $1.9 trillion price tab is drawing widening opposition from Republican lawmakers. Bloomberg sources say Brian Deese, President Biden's chief economic advisor, will meet with the group in the next week or so. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, the World Economic Forum is looking a little different this year, moving to Singapore later in the year. Next week will be the Davos agenda, where world leaders meet virtually to discuss the crucial year to rebuild trust. Well, Klaus Schwab, the chairman and, of course, founder of the World Economic Forum, says that this year could be a historic one and in a positive way. The pandemic offers the chance to rebuild better. He also released a new book just a short while ago. So, Klaus Schwab, thank you so much for joining us today ahead of this virtual Davos agenda. It's very clear that the devastation from the pandemic could be felt far and wide in terms of livelihoods, in terms of people losing their jobs. How do we rebuild better? And is there a real purpose from governments to rebuild better, or are they still just fighting fire?
Yes, of course, we are still in a situation where we have to fight the virus, but we also have to look at the future. And it's now a historical moment, a crucial moment to rebuild the future, to reset our policies. And here, certainly, we have to take the lessons from the pandemic, which we had to fight and still have to fight. And we have to build a world which is more resilient, more inclusive, and also more sustainable. And in order to have a big kickoff and to use this opportunity, we organize next week the Davos Agenda Week as a kind of mobilization of all the spirits, all the good ideas and so on, to show visions for the future.
Who will show the way, Mr. Schwab? So there's a book. We heard also this rebuilding better from the IMF, frankly, almost from the start of the pandemic. But does the Biden administration need to show the rest of the world how it's done?
No, we will have, of course, key leaders next week assembled. It's a little bit early for the new U.S. administration, but John Kerry will certainly present his ideas about climate change. But we need also a mindset change. And I think we are also living in a very critical phase for how we are doing business. We are moving really into the age of what I would call the age of stakeholder capitalism. I think we have seen in the pandemic that companies who are committed to stakeholder responsibility have performed better because they have invested into the long-term vitality of the company. We will next week also show that we walk the talk, and we will announce that about 50 of the top global companies have committed under the leadership of our International Business Council not only to talk about, let's say, stakeholder responsibility, but to report on in very concrete metrics about how they are performing.
Do you believe, Klaus Schwab, that governments and world leaders are ready for the challenge, that they will, try and really address inequality, not just talk about it, but take concrete steps so that there's a real difference in 12 months, 18 months?
I think there is now a new willingness. We have seen it in the statements from many capitals around the world. We have seen, let's say, the positive signs of the US government by rejoining the WHO, rejoining the Paris Agreement.
Good morning, ladies and gentlemen. I'm going to place a stop on profit for Japanese yen. So all holders who purchased Japanese yen at 103.558, you can place a stop on profit at 103.608. Okay, I'll show you where. And based on the margin you have with your broker, you can figure out basically how much profit you're going to have if the price will go down and it will be executed at this price, 103.558. Okay? Okay, guys. See you later.
We have to make sure that we integrate into the notion of capital, where we feel now, when we talk about capital, it's mainly financial capital. But we also have social capital, we have human capital, and we have natural capital. And if we want to regain trust for capitalism, we have to embrace all those different functions. It's not an either or. I think a company will succeed very well if it really takes into account all those dimensions, if people feel it serves society, and it's also in the best interest of shareholders if the company works on its own sustainability long term. And the own sustainability comes mainly from being trustworthy.
Klaus Schwab, it was only a year ago that we were in Davos, starting to hear about this new virus, this novel virus in Wuhan. No one at the time was really predicting we'd be here today, 12 months later. Why are economists, chief executives, even world leaders so bad at predicting these big crises?
We have worked, and we have shown in our global risk report since many years, that the virus is a danger, is a high risk. Actually, CEPI and Gavi, the two global organizations which are now mainly involved in fighting the virus on a global basis, have been created in Davos. The lesson which we draw is we have to make sure that when we raise the voice, that we follow up and enough attention is given to those risks. In this respect, we just published also our newest risk report, and it's very clear that the world has to undertake tremendous efforts to be more resilient, because we may face other viruses, but we have to become much more risk conscious. And probably we have to invest into our resilience as a global community, as a global economy.
Klaus Schwab, this is your new book that just came out, literally, I think, or it's coming out in 1 or 2 days. We have the book cover, and you focus also on the planet. So it's Rebuilding Better, a global economy that works for everyone, including people and the planet. There has been a lot of talk about what we can do for the planet. Does this really translate into action? Are you satisfied with the number of commitments that chief executives and world leaders are pledging?
Yes, I see a tremendous effort in terms of rallying now behind net zero, not only governments but business. We have a number of initiatives at the World Economic Forum. For example, we work sector by sector how to decarbonize those industries. So it is an awareness now generally, it's generally accepted that climate change, if we do not tackle with it, could be the next big, let's say, virus with much more damaging and long-term consequences compared to COVID-19.
Are you confident, Klaus Schwab, that you'll be able to do the Singapore summit in person, given the way things are going?
We hope, you always have to hope for the best and to prepare for the worst. We hope with the vaccines now also again the program of the US vaccinating 100 million people in 100 days. We see it a fast, let's say, an acceleration of the vaccination in many countries. I'm hopeful, but I'm also concerned because as long as we do not distribute those vaccines on a fair level around the world, we may have new forms of the virus coming back, hunting us even in those countries where people or a majority of people are already vaccinated. So we have to be, I would say we have two scenarios, a very optimistic one that by summer we are finally in a situation where we can at least declare partial victory about the virus, but we may be hunted by the virus for quite some time, and this means again how important it is to tackle this issue on a global basis.
Thank you so much for joining us today. Klaus Schwab, there, founder and executive chairman, of course, at the World Economic Forum, out with his book with Peter Van Ham on January 25th. And of course, a busy week ahead as it's virtual Davos week. Now, coming up, we also focus on Joe Biden's policies and the Biden agenda. We talk about the president's stimulus plan and, of course, how it's being taken by the markets. That's coming up shortly. And this is Bloomberg.
it is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, on his first full day in office, Joe Biden ramped up the U.S. response to the coronavirus pandemic, warning that 100,000 more Americans were likely to die from COVID in the next month. While President Biden is aiming to overhaul the federal response to the outbreak with a series of executive actions, including stabilizing the supply chain and boosting vaccine distribution. But he warns that it won't be easy.
In a dark winter of this pandemic. It's going to get worse before it gets better. It's going to take many months to get where we need to be.
Well, joining us to talk about market dynamics is Christian Muller-Gleesman. He's Managing Director of Portfolio Strategy and Asset Allocation at Goldman Sachs. Christian, as always, thank you so much for joining us. We hear now about more restrictions being put in place in Europe. Certainly, the U.S. taking a tougher stance on COVID. What does it mean for what kind of economy we'll see in the next 3 months, and then what kind of recovery comes thereafter?
Yeah, no, I think you're absolutely right. The growth picture is worsening. It's not completely unexpected. Our economists actually expected Q1 to be a pretty weak quarter globally, in Europe and the US in particular, where you have those lockdowns. But there is the sense that the second quarter will be incredibly strong. And as a result of that, markets can look through that. And the big problem is, as we are going now through this kind of period, the kind of tail risk of this lockdown and this kind of virus situation extending into the second quarter has picked up. And I think that's kind of what the market is really struggling with right now, because so far it's completely looked through kind of any of the kind of COVID infection data, the hospitalizations and the death rate. So it feels like you're a bit vulnerable right now.
So, Christian, what is the market worried about? Are they worried about scarring in the economy, or are they just worried about this fictitious kind of suspending the economy for longer?
It's a really good question. The big problem you're facing is always not only what is the actual scenario the market is worried about, but also what it's pricing. And what we found is that over the course of the last 1.5 months, the market has gotten incredibly bullish with regards to the reflation scenario. So you really see this across assets. We have this cross-asset risk appetite indicator, which kind of aggregates 27 risk premia and pair trades across assets. That has actually moved to all-time highs last week. And the problem is, the higher and the more bullish the sentiment is, the more kind of easy it is to disappoint. And as a result of that, it doesn't necessarily require a devastating kind of COVID outcome where you see scarring and where you see possibly the vaccine failing. These type of scenarios, I think they're still quite unlikely. I think what the market needs to grapple with now is, are you potentially pushing back the recovery for longer? And do you want to continue to hold a lot of that risk and that exposure which you've built up potentially, because it might get a bit more bumpy?
And your answer to that, I guess, you know, on the positive, it means that on the positive for the markets is that maybe inflation is even that further away, so support from central banks is here to stay.
Yeah, I mean, this is exactly the right question to ask, because you've seen not only the growth picture at the margin worsen, but you also see the growth inflation mix and the growth rates mix worsening. So you've had the ECB meeting yesterday, where at the margin it came out that the ECB might not be leaning against the recent steepening of yield curves, the recent sell-off in the back end. You've seen, obviously, in the US, a decent sell-off in the bond market, in part in the real yields, which are so important for markets to stay low. So I think you're dealing on both ends with a bit of worsening, and as a result of that, it's more difficult for sentiment to stay at these incredibly high levels. But I think at the margin, you're right. We would look at a kind of correction, if it comes, as an opportunity to size up risk for the end game, which to us is a favorable one, where we will see vaccination on a broad scale, where we will see hospitalization, death death rates come down significantly, which will then allow governments to reopen. And there will be at least a window of a few quarters where we think the growth inflation mix should be quite favorable for risky assets.
Christian, what's your take on U.S. assets given the 1.9 trillion plan that we're seeing from the Biden administration, and just in general the way that so far Joe Biden has tried to get up front from the pandemic?
Yeah, no, I think for the economy, the tail risks have come down to some extent because you now have a fiscal put, and that's a good thing. But the problem is the equity market and generally asset markets are not the economy. And obviously the US equity market is dominated by tech stocks, which have done phenomenally well exactly because they're not linked to the economy last year. And the problem is now not only do all those assets maybe not benefit as much from the fiscal, in aggregate at least. There are beneficiaries like the Russell, of course, which has done phenomenally well since then. But I think in aggregate, asset markets have a bigger problem, which is duration. All assets in the US in particular have become longer duration. Investment grade credit, you look at equities like the S&P, of course the NASDAQ, and all of those assets are actually more sensitive to higher rates. So as you do get the US government via fiscal spending help the reflation of the US economy, that isn't always helping the US equity market. And we've seen that year to date. The S&P is actually more or less flat. The Russell is up 10%. So you see like a real kind of drag here from those higher yields. And the yields are, of course, very closely linked to the economy.
Christian, thank you so much. Christian Müller-Gleesman there from Goldman Sachs stays with us, and we'll talk a lot more, of course, about what he was just explaining very clearly. We'll also talk about maybe euro levels and what we heard from Christine Lagarde yesterday. Now, coming up, much more on the markets and where we're in the fight against COVID and, of course, the race to vaccinate the world. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, there's quite a lot going on, of course, in the markets. Concern about a possible double-dip recession in Europe means that European stocks are dipping, and there's more restrictions to curb coronavirus, which is denting some of the optimism that we saw in recent weeks. Coming up, the ECB holding its first policy meeting of 2021. We discuss that story with Christian. This is Bloomberg. Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a taxi.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, Wall Street may have hauled in a windfall, but the rewards for traders may be more modest. On average, the largest U.S. banks boosted average pay by $271 per employee, even as overall revenue soared. Well, joining us with the very latest is Bloomberg's Danny Berger. Danny, good morning to you. So why hasn't the pay budged much at these banks?
Francine, as one consultant for banks told us, it's all about optics. Optics in the sense that even though these trading desks and capital markets did really well for the big Wall Street banks, you had other areas that struggled, like lending, which leaves the overall revenue at banks more or less flat year over year. And then you have the political optics. In a year where there's so much of a gap between what Main Street looks like and Wall Street, when you have really all of these inequalities throughout America, you have banks that are worried about more political scrutiny with the new guard, so perhaps this is some self-regulation. And that's how you get this picture, with JP Morgan revenue per employee rising 22%, but pay just rising 1%. At Goldman Sachs, it's 15% for revenue per employee, and then a 2% rise on pay. This is the biggest gap, Francine, since 2009.
So, Danny, that's overall pay. What about some of the top rainmakers and executives?
So we do expect some of the executives' salaries to look flat. For example, JP Morgan's Jamie Dimon, his is going to be unchanged for the year. But on the bank calls, they did say, look, we're in the business of retaining talent. And to retain that talent, you have to pay them more. So it doesn't mean everybody's just going to have a flat $271 pay increase. There surely will be more people who get a higher increase. Bank of America also has a program for people who are getting paid less to reward them for coming in through the pandemic. So this flat figure, Francine, it is the overall figure. Within that, we should expect some discrepancies between some people able to get an increase and more bonuses.
Danny, thank you so much. Our Danny Berger there with the very latest at some of these banks. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. The EU is warning the City of London that any deal on financial services remains a distant prospect. Europe's Commissioner for the Industry says the bloc doesn't have a fixed timeline for reaching a decision on equivalence.
There is no recreating the single market for financial services for the United Kingdom when they have decided to leave the single market. So what I'm saying here very clearly is change is coming.
Now, the top U.S. infectious disease expert, Anthony Fauci, says he feels liberated by working for President Biden after President Trump tried to sideline him. Speaking at a White House briefing, the new administration's chief medical advisor said it felt uncomfortable to have to contradict the previous president over medical advice, saying he took no pleasure in it at all. And Mitch McConnell, now Senate Minority Leader, is proposing to start Donald Trump's impeachment trial next month. He wants to give the former president enough time to mount a defense, saying any half-baked process could damage the Senate or presidency. The trial is in limbo until Speaker Nancy Pelosi sends the article of impeachment to the Senate. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, we're just getting some PMI out of the UK, and actually the number is really pretty terrible. So we'll also have a look at whether it has a direct impact on pound, but this is for January, and services PMI coming in 38.8. That's, of course, significantly below 50, but it's also significantly below what we were expecting, which was a 45 handle. So you can see currently cable at 136.66. Now, I was going to actually ask Christian Muller-Gleesman from Goldman Sachs about the European Central Bank, about the possibility that we have a double-dip recession. But Christian, actually, let me go straight to what we're seeing in the UK. What do you do with UK assets right now? I mean, you know, it's a little bit in limbo in that, sure, they have control. They could now, because of Brexit, sign accords. They could take longer. But then we have these figures that, because of lockdown and coronavirus, are just looking quite bad.
Yeah, no, I mean, this is not just going to be an issue for the UK, of course. I mean, we have lockdowns everywhere in Europe, and we have a negative drag from COVID on growth globally. So we will see several of those releases, and we'll get the European data later. But you're right. I think the UK had a very strong kind of capital flow story post-Brexit, because international investors, they breathed a sigh of relief, in the sense that the uncertainty on these trade negotiations is coming down, so the UK assets become more investable. But what is important to keep in mind is that, for example, the FTSE 100 is not really the UK economy. Far from it. I think it has most of its revenue outside of the UK, a large amount of the revenue in dollar. And what we like about the UK is actually the kind of sector and style exposures, because it's very value. It has a lot of commodities, and it has a very high dividend yield. So I would actually argue that, coming back to what we discussed earlier, the COVID news flow shouldn't completely surprise people. It might surprise people in terms of magnitude, how bad and how potentially prolonged this kind of dip in the data is. But for an index like the FTSE, I would assume that this is a real buying opportunity, because you have these global companies that are actually at the margin been a big laggard over the last year, and as a result of that are quite cheap.
Christian, if you look at the FTSE, it also has quite a lot of exposure to companies that as soon as we touch peak oil or we go really into more climate change, could take a hit. So how do you handle that?
No, I think this is the big balance issue you currently have, where everything that is good, that is secular growth, that has a good long-term story, is incredibly expensive and has gotten so last year in function of these declines in bond yields, which really pushed people towards anything that has long duration and sustainable cash flows. So the problem is now the bigger opportunity is to go down the quality curve and go towards places which maybe you don't want to own in 5 years, but you do have a window here where those places are cheap and they have potential tailwinds from the global economy, and in the case of the FTSE, from oil prices, where we remain quite bullish for the rest of the year, because we just feel that as growth recovers eventually, you do see a significant pickup in demand for oil. And that means that while the FTSE 100 might not be a 5 to 10 year outperformer, that's debatable because of some of the sectors and companies, but I think certainly the window for outperformance this year is a much better one than for example, last year.
Christian, talk to me about what you actually heard from Christine Lagarde yesterday. Was there anything, I know, they stayed put. Is there anything that makes you a lot less optimistic about the future for the European recovery?
Yeah, I think at the margin, the message was maybe cautiously, a bit more cautiously optimistic. And I think the important thing the market currently cares about is really the potential for policy support to be withdrawn. And I think this is the same for the Fed. Like every speech, every meeting is scrutinized for indications for the first hike, for tapering. And I think yesterday you had a situation where at the margin, the ECB talked much more symmetric maybe than the market would have liked, in the sense that I think there was an emphasis on very favorable financing conditions. And at the margin, it probably opened a bit the door for concerns that if you do see a kind of recovery from COVID and a pickup of inflation expectations, that maybe the PEP envelope will be reduced and not executed as the market thinks. So I think at the margin, yesterday was maybe a small hawkish surprise, but I don't think, to your point, there's too much to read into it yet.
What do you look at, Christian, in terms of the biggest play for 2021? Is there an asset class that's been overlooked that would be a good time to go back in, or do you just go into the players that you liked into 2020?
No, I mean, definitely there's a significant shift in our asset allocation. Last year, it was all about long duration, stable growth, real assets that benefit from lower real rates. So it's been about S&P, gold. It's been, generally linked to quality equity. And I think this year, as we are dealing with the COVID-19 recovery, we are moving down the quality curve towards more pro-cyclical assets and towards laggards. I mentioned the FTSE, which is very value. It has a lot of commodity exposure. We generally like commodities. We like cyclical parts of the different asset classes. For example, Latin equity have been a big laggard. So at the margin, you definitely see a shift down in quality. And what's really interesting is at the margin, equities, despite the fact that the absolute valuations are very high, still screen the best in terms of the kind of overall assets. So we're overweight equities, neutral credit, underweight duration.
What do you do with China? Is the world becoming more bipolar, US-China?
Yeah, I think like China is interesting because, again, this is an example of an equity market which is not only the economy. Like China tech and Asia tech in general have been among the best performing assets last year. And you kind of feel that over there you have similar headwinds as in the US, where you have higher rates potentially, or certainly high valuations, which limit the return potential. The Chinese economy on top of that, you have to consider significantly decoupled from the rest of the world, especially post the first quarter, which has meant that the data is incredibly strong, which means policy tightening is probably the topic already. Whereas in most economies, as we discussed, the central banks are reluctant. And that could mean that China, both from a kind of China tech equity point of view and from a cyclical equity point of view, maybe has a few more headwinds. So at the margin, I would argue that we still like China equity, but the kind of risk reward is probably a bit less good compared to something like Latin equity, which have done really poorly last year.
Christian, thank you so much for all of your wisdom. Christian Müller-Gleesman there, Managing Director of Portfolio Strategy and Asset Allocation at Goldman Sachs. Now,
really the crux of the matter is whether or not...
Up against a rising tide of infections and deaths as world leaders race against the clock. We bring you the latest on the vaccine programs. That's coming up next, and this is Bloomberg.
I can tell you, I take no pleasure at all in being in a situation of contradicting the president. So it was really something that you didn't feel that you could actually say something and there wouldn't be any repercussions about it. The idea that you can get up here and talk about what you know, what the evidence, what the science is, and know that's it. Let the science speak. It is somewhat of a liberating feeling.
Anthony Fauci there, the U.S. government's foremost expert on infectious disease, admitting he is looking forward to working with new President Joe Biden after Donald Trump tried to sideline him. Now, a variety of vaccines are being rolled out at different paces across the world as countries battle new variants and a rising death toll. More than 56 million shots have been administered so far. Johnson & Johnson, of course, expected to apply for market authorization for its vaccine in mid-February or earlier. The road to global recovery, though, is proving pretty bumpy. Now, joining us is Sam Fazeli, Senior Pharmaceuticals Analyst and Director of Research for Bloomberg Intelligence in Europe. Sam, as always, thank you so much for coming on. What is the one thing that you worry about right now? I know that there's a race to get as many vaccines as possible right at a time where, certainly here in the UK, the number of deaths, the number of hospitalizations also increase increasing? Are we moving too slowly, or are we going as fast as we can?
Hi, Francine. Well, I mean, it seems to me that at least some countries are going as fast as they can, and that would certainly include Israel and the UK and some states in the United States. Others are a little slower. Maybe they think it's more measured, but I would call it slower. And of course, you have these supply hiccups here and there, which are inevitable given that you're rolling out a vaccine that's based on a new technology that didn't really have this kind of level of manufacturing just a year ago. So that's the key thing here.
Sam, is the UK doing this great, maybe the biggest experience by giving the first dose of the Pfizer vaccine, but then waiting 10 to 12 weeks for the second dose? Does it make sense how they're using it right now? Because you get vaccinated, or you vaccinate much more people straight away, but then you could not be as immune as if you did it the way that Pfizer said you should administer them.
Yeah, let's use the word vaccine for when people have had the 2 doses. That's what I'm going to try and do. So basically, they're getting the most shots into people at the moment. And I'm assured by the experts who were partly involved in the decision that was made, that the decision was made based on a lot of expertise and science. Unfortunately, there is no data that specifically backs the decision to delay the dose of Pfizer's vaccine. So this is either going to end up being a stroke of genius and application of tons of expertise and science that these folks on the JCVI in the UK have, or, God forbid, it ends up being a wasted 5 million shots and we have to go back and revaccinate everybody. And let's hope that it doesn't have anything to do with, which I think a lot of people agree is unlikely to be the case, to create another yet resistant variant to the vaccine. That's what most people don't think is going to happen, and I hope they're right.
Sam, when do we find out whether this works or not?
I think, so we've started following that, Francine. You can find it on our research on the Bloomberg terminal and trying to find different ways of looking at this. The first area that should show an effect should be Israel, because they're now at close to 35% vaccination levels. And of course, that's going to level off, because I think you're going to get the easier people in first, and then you have to spread that out. But that's a great start already. So, and I'm seeing hints that it's changing, but we need a much bigger change for us to get excited. And that might come in the next 3 to 4 weeks, I would say.
Sam, I know France is really one of the countries that is just not vaccinating the number of people that is even close to what we're seeing here in the UK. Is it an infrastructure problem? I know here in the UK you can also get vaccinated not only by the doctor, but why is there such discrepancy about about how various countries and leaders are dealing with it?
Yeah, I think some of it's got to do with bureaucracy. And I am, as you know, living in France at the minute. I do hear this phrase, we would much rather have a French vaccine than another one. And I suspect that probably happens in the UK too, but people are just, at least there, they've got the AstraZeneca vaccine that they can call a British vaccine. I don't know how much that's got to do with it, but I would say that the majority of the problem is bureaucracy, and I think people are also kind of happy with it, seeing it go slowly, because they think that's probably a better, more measured approach. They'll have to realize they'll be behind the curve, as you know, Germany now is almost double the level of vaccinations per capita than France is. So at some point, you're going to have to deal with this issue of, can we cross the border easily while we're still waiting for vaccination levels to pick up?
Sam, thank you so much. Bloomberg Senior Pharmaceuticals Analyst and Director of Research for EMEA. He is Sam Fazeli. Now, coming up, Bitcoin rattled. The digital currency steadies after a slump that rocked the crypto boom. We have the story next, and this is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Pay at Wall Street's biggest banks is rising much slower than revenue. Goldman Sachs generated an extra 15% per employee, but only spent 2% more. The gap was even wider at JP Morgan. Revenue up 22% per person. Pay was up only 1%. The firm also kept boss Jamie Dimon's compensation steady at $31.5 million. Now, Citigroup is making gradual progress on narrowing its gender pay gap. Women now make 26% less than men, and a 1% improvement from a year ago. In the US, minorities still earn 6% less than non-minorities. Similar to last year, the bank is one of the few companies to give detailed statistics on its pay gaps. And Google is threatening to disable its search engine in Australia if it's forced to pay local publishers for news. It's a dramatic escalation of a months-long standoff with the government. Google says the proposed new rule is unworkable, but Prime Minister Scott Morrison is hitting back, saying Australia makes its own laws. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, Bitcoin has steadied after earlier slumping below $30,000. The retreat is stoking fresh questions about the sustainability of the cryptocurrency boom. Bitcoin is also on course for one of its worst weeks since the pandemic, world financial markets in March last year. Well, joining us now is Eric Lam. He's Bloomberg's Asia cross-asset reporter in Hong Kong. First of all, Eric, good morning to you, or good afternoon where you are. What may be some of the reasons behind, Bitcoin's slide this week, or in fact rise sometimes? What's it tracking?
Yeah, it's been a question for constant debate pretty much ever since we started seeing Bitcoin's meteoric rise through the second half of last year. Everything from the rise of institutional investment interest as a dollar hedge to really another round of speculative mania, reminiscent of the bubble from 2017. Now, this week, we have seen some of the worst selling for Bitcoin going back to last March. I would note that, we saw Bitcoin quadruple in value last year, and certainly some people are likely taking profits after that massive run. It has lost some of that momentum through the first part of January here. Also cited was some recent testimony from Janet Yellen in her Senate confirmation hearing, where she raised cryptocurrencies as an area of concern for terrorist and criminal financing. And that's something that's been kind of hounding Bitcoin and other cryptocurrencies for a long time now, is those ongoing concerns about criminality, which the industry has tried to shake. So plenty of reasons for why it might be moving lower, but as we see with the price, it has steadied back almost 32,000 at the moment.
Thank you so much. We'll have, of course, plenty more on Bitcoin throughout the day. Eric Lam there, Bloomberg's Asia cross-asset reporter. Now, Bloomberg surveillance continues in the next hour. Tom Keene joins me out of New York. We'll, of course, top cryptocurrencies. I know Tom was really interested to talk about negative rates. We had the lowdown from, of course, Goldman Sachs' Christian Gleesman saying, look, I know the counterfactual is very difficult, but at the time, it was probably the needed thing in certain respects to not face a depression. Now, stocks in Europe actually dipping on a couple of things. First of all, they worry about resurgent cases of coronavirus, and that's definitely denting some of the optimism over earnings and plans for additional stimulus. Yields on treasuries and German bonds edging lower, crude oil declining for a second day. This is Bloomberg. another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television. The dark winter of the pandemic, Joe Biden says he will move heaven and earth to vaccinate 100 million Americans in the next 100 days, but warns that 100,000 may die in the next month from COVID. A last resort, Angela Merkel warns that Germany could close its borders as EU leaders say stricter lockdowns could be necessary. And Bitcoin steadies after a slump that raises fresh questions about the sustainability of the crypto boom. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lackman, London, Tom Keene in New York. Tom, there's a number of stories, of course, with Biden signing new executive orders, but also big story for Bloomberg Surveillance. You were vaccinated yesterday, and I really can't wait to know a little bit more about that. But maybe we should start with what the Biden team is saying, Tom.
Well, the Biden team is here day after day, starting the day at 5 a.m. There's all sorts of signals here, including a very different communication strategy, Francine, and I'm sure that's part of it as well. Today, on the labor state of America, and this folds into everything that we do, Francine, which is either the perception or the real reality of where labor is in America. And as we heard from Gallup yesterday, Mohammed Yunus, America's really upset about his place in society right now. Further executive actions this morning.
Yeah, so this is, Tom, I'm looking, of course, at what we know to boost food assistance for impoverished Americans. This is the executive order that Joe Biden should sign today, but also use these federal contracts as a step towards his proposed nationwide minimum wage hike, which would seek immediate help for an economy, of course, struggling to cope with COVID-19. Yeah. So to talk about these executive orders, we're joined by Leslie Vinjamuri, Chatham House, head of the U.S. and the Americas program. Leslie, I have to say, I mean, the tone couldn't be more different from the previous administration. Every day now for 3 days, we have news at 5 a.m. Washington time about executive orders and, the plan for the Biden administration going forward. What more do you think we'll see in the next month or so?
Well, we should see, of course, in the next, hopefully, few days, a number of confirmations come through, certainly on the foreign policy side and defense side. And really, certainly on the global side, we're already seeing that reaching out, getting back into Paris, getting back into the World Health Organization, and importantly, this sign that America is going to participate in COVAX, that effort to really distribute the vaccine globally, move forward on renegotiating the START treaty. But I think, as we know, Francine, so much of the story is going to be a domestic one, and making sure that stimulus can work its way through Congress. That is the big question. Will it get through the Senate? So I think we are, as you said, we're seeing a very clearly focused, fast-moving strategy on the home front, but also on foreign policy. And there are a number of big foreign policy challenges that the new administration is going to want to tackle immediately, from climate to Russia and arms treaties, to China, and of course there's a long question about Iran.
Leslie, I mean, we look at the executive actions for today, and we also understand that there's a restoration of rights of federal workers that were stripped by his predecessor, Donald Trump. How much will some of these executive orders go in the way of actually, I guess, helping with inequality? And will it be seen as much, or will it be seen as, divisive because too left-leaning?
I think ordinary Americans will definitely respond with their pocketbooks. If that stimulus check arrives in the mail and it's much larger than it was going to be, if the unemployment benefits go up, if sick pay is received, if that child credit is delivered, then it's hard to understand how that would be seen as too socialist. So I think that, and importantly, and as we saw, the most important thing, of course, will be people getting access to that vaccine and believing that they will be able to restart their lives. This is clearly the most important thing on the agenda.
Leslie, good morning. Tom Keeney in New York. Ezra Klein in the New York Times today has a spectacular essay, as only Ezra Klein can, on how short the distance is to 2022. I think we get the domestic urgency of the Biden administration on what they need to do to improve prospects in 2022. What do they need to do on the foreign front to help Democrats in the Senate, the House, the state legislatures in 2022?
Well, you ask a really great question. And remember the big point for Ezra Klein, it was a phenomenal piece, was, it's not just those measures, it's fixing the Senate, it's making this work. It's sort of one thing to have a plan, it's another one to get it through. On the foreign policy side, of course, remember, Americans don't vote on foreign policy, but it certainly matters. I think really tackling the big question of how America is going to sort out its relationship with China on questions of technology and trade, but also pushing forward to cooperate with China and show some big wins, or at least the beginning of a strategy for cooperating on global health and especially preventing the next pandemic, and then on climate. I think demonstrating a workable relationship that isn't stuck and that's making some form of progress with China will be really the most important headline that we can see. And talk about a tremendous team that Biden's put in place to try and move that forward. Kurt Campbell really leading a lot of thinking, and his thinking is very well known to all of us who follow. I think there's at least some hope, and it looks like China's waiting.
So much of this is 10 years ago. I think it was 10 years ago, maybe 11 years ago. Leslie Vinjamuri, President Obama at the time, called it a shellacking. How did that occur? What did the Democrats screw up the last time around?
On foreign policy, Tommy, what did the Democrats mess up on foreign policy?
Well, I'll take it any way you want, but the fact is, I can never forget Mr. Obama saying very clearly, we got pounded. He called it a shellacking. How does Biden avoid the shellacking? What is it, to go more to the Republicans, or is it to be more stridently Democrat?
It's clearly to deliver, right? And if you're thinking about the midterms and what lies ahead, getting right off the block on delivering and restoring the health of Americans and their ordinary daily life, that is the number one thing he needs to do. If he could do that, it's hard to imagine how you're going to have a shellacking. Remember, the other really important point, Tom, as you well know, is that the Republican Party isn't, at its best at the moment. It's clearly trying to reunite. It's people are splintering off. It's not clear where they're going to stand or how they're going to come together. There might be an impeachment trial that will have all sorts of impacts internally. So it's not just what Biden does, although clearly that's absolutely essential. It's also what the Republicans do to restore their credibility and to come together as a party over the next several months and over the next year or so.
Leslie, is Donald Trump still in charge of the Republican Party?
I don't think so. Francine, the way I see it is that January 6th just was the finish. And I know we can cite all sorts of polls, but I'm sure you do the same. I spend a lot of time talking to so-called ordinary Republicans across the country, and I am continuing to hear that people just don't think that there's much left for Trump in terms of being a very serious contender. But, there's so many more interesting and pressing questions right now in the immediate weeks ahead. I think that his visibility is going to fade very quickly. The one caveat, of course, is that if a trial goes forward in the Senate, that changes the game. That changes certainly the game of his visibility, and it might shift how people feel.
Leslie, thanks so much. Leslie Vinjamuri, the Chatham House head of the U.S. and the Americas program. Now let's get straight to the Bloomberg First Word News. Here's Karina Mitchell. Hi, Karina.
Francine, good morning to you. The Biden administration is trying to get Republicans on board for the president's coronavirus relief plan. His top economic advisor, Brian Deese, plans to meet with a bipartisan group of lawmakers to push for the bill. But the measure's $1.9 trillion price tag has led to growing opposition from Republicans. Meanwhile, President Biden's pick for Treasury Secretary is leaving the door open to a tax increase. Janet Yellen says she would work with lawmakers to fast-track a series of tax hikes on corporations and wealthy Americans. The money would be used on infrastructure and expanding the social safety net. And infectious disease expert Anthony Fauci says it feels, quote, somewhat liberating to work with President Biden. That after Donald Trump tried to sideline him often in the fight against the virus. Fauci admitted he had to contradict the former president at times, such as when he advocated for the use of an unproven malaria drug to treat the virus. And European Union leaders are painting a bleak picture of the virus. They warn that mutant strains will lead to longer and possibly stricter lockdowns, and there's no clear sense of when the restrictions will be lifted. Governments across the EU are struggling again with rising numbers of infections and deaths. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Tom.
Karina, thanks so much. Equities, bonds, currencies, commodities. It's a quiet tape. I've got one screen with the VIX at 23.04, but what you really have is a pause. Finally, futures down 25 off the inaugural Bloom. Dow futures down 229. There's no question about that. What we have seen here is finally an inaugural pause. Francine?
Yeah, Tom, stocks in Europe dipping. I think, of course, they're worried about some of the extra restrictions to curb these cases that are escalating, and that's denting some of the optimism that we had over earnings. Of course, yesterday, the ECB warning of a double-dip recession, treasuries and bonds pretty much steady. But, Tom, I actually want to talk about your vaccine. You had the first dose yesterday. Was it a long time? Did you wait long? How was it?
Like a Swiss watch. It was remarkable. I got in pretty much right on time. It was amazing, as I just set out on Twitter, the diligence over at NYU Langone of the people. I had no idea. What I got wrong, Francine, was how assembly line it is. And because of that, there's a focus among the nurses and their staff handling a lot of old people. I was the youngest guy in the room.
Of course, you always are, Tom, and it's just like a flu shot, right? It doesn't hurt. It's just like a normal shot.
It's just like a normal shot. I was waiting for drama. Pharaoh demanded tears, and I couldn't deliver the goods. But it's just like a normal shot. I did take 2 Advil this morning just to get through the grind of Friday here. You know how Fridays can be on surveillance.
Yeah, they certainly can. Well, look at my broad smile. It's always good to know that the people you're closest with are safer. Coming up, we speak markets with Daniel Morris, BNP Paribas Senior Investment Strategist. This is Bloomberg.
Continues to be, recovering well. And with the opening up that was decided at the last 5-year plan, that is a golden opportunity for many international banks.
So we'll look to double our footprint across IB and also wealth management and asset management in the 3 to 5 year time frame.
Growth outlook structurally is very strong. But it does need to consolidate and allow time to help the share price appreciation to move more in sync with the growth.
So China can avoid
further decoupling if they stop these inappropriate actions.
But at the moment, we really want to see the dust settle first on international relationships, on China's role in the global economy.
I don't see a likelihood of a big change in the policy with the change of administrations.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg Surveillance. Good morning, everyone. Francine Lacroix and Tom Keene on a Friday. It's Friday, Megan, right? Help me here. It's Friday? It's Friday. Yeah, I didn't know that.
Second Friday of the week.
Yeah. With Martin Luther King Day and all, I'm out of whack. Joining us now, Daniel Morris, BNP Paribas, to get us into the weekend and thinking about how to recalibrate in the equity markets into 2021. Daniel Morris, you've got a brilliant short note, and I love the single sentence. Fund flows are actually negative. Describe how fund flows are negative.
Well, I've been seeing at least a lot of reports from Southside Research highlighting how euphoric, toppy, frothy, pick your adjective, the markets are, and they show different indicators. Illustrating that, in one in particular I saw showed a subsequent, 12-month forward negative returns likely for the S&P. So we looked at some of the components of those indices, and one of the things normally that goes into it are fund flows. And the parallel is 1999-2000, when you had the tech bubble and you were selling whatever you had so you could pile into equities. And there were huge fund flows into equities and into tech during that bubble. You don't see that now. You haven't had really inflows into equities all of last year, but even more recently, with this turn, even from the vaccine news, you maybe would have anticipated retail investors who we know have a lot of cash on the sidelines, have bought a whole lot of bonds, would say, hey, this is a great time to move in equities. That's not happening. So to whatever it is that is pushing the markets up, it's not just pressure from cash having to be put to use.
And here's the thought for the weekend, folks, for global Wall Street, and you nailed this, the partial differential of the put-call ratio. Daniel Morris, you talk about the speculative enthusiasm of a lot of buying of calls, optimism, versus the dynamics on the put side as well. Is that speculation separate from institutional long-term money, or do you combine them together?
Well, you certainly want to look at both, but I think that there's certainly a difference between having an option on market upside, which I think makes complete sense in this environment. There is potential for positive surprises right now. And separately, if you looked at actual asset allocation among institutional investors, you're not going to find a huge overweight to equity. So I think it is an important distinction to make between options on some potential upside and investors, generally speaking, being excessively exposed to equities, which again, we don't see to be the case.
Dan, good morning from London. What is the market actually looking at right now? We saw from Christine Lagarde talk about a possible double-dip recession. Do they worry about cases resurging and therefore the economy scarring, or do they still just look at earnings going forward?
Certainly for now, it does seem to be kind of an obsessive fix on that medium-term outlook and kind of ignoring what is a kind of slow accumulation of bad news in the near term. I mean, we all knew that the vaccine rollout would be a bit bumpy. There was always potential for pandemic news to get worse, but both of those things have happened, and particularly in Europe, the rollouts have been really quite slow and surprisingly so, and now you're getting the news of needing longer and deeper lockdowns to combat the latest the latest variations on the virus. But, again, in the medium term, everything will be fine. But it is getting pushed out. And at some point, that does need to be reflected in earnings expectations, not only in terms of, okay, when are we going to get back to higher levels of profitability? But again, as you point out, either governments have to step up and continue to support households, continue to support businesses so you don't get that long-term scarring, having to be shut down for a year, or alternatively, at some point, we'll think about what this means for debt levels and the challenges for countries that don't have the fiscal capacity, like the U.S. for that matter, or say Germany, to just add another stimulus package to tide them through another couple months. Some countries can do that, but not all can.
When should we start worrying about debt?
Well, it's really going to come down to when the central banks start signaling to us that their policies are going to change. So we certainly think it's premature to talk about the Fed tightening or taper tantrums or balance sheet rollouts, but one day that certainly is going to be the key thing that matters. Because if you look at the huge increase in debt you've had through the pandemic, I mean, percentage increases are bigger than you had during the global financial crisis. But if the central banks are buying the bulk of it, so to speak, for now, it really doesn't matter. But at some point it will, and we need to know what's going to happen to that debt. And that's going to have dramatic implications for markets. But I think we all appreciate it's not something that the central banks are going to broach in the near medium term.
Dan, then what is the to-do list now? What is the tweak here into February of your outlook for 2021?
I think a lot of it is going to depend on what happens with the negotiations in the U.S. around stimulus. I mean, that's the big marginal news here.
Really?
In Europe, there really isn't going to be much. There's no more fiscal stimulus coming. At an EU level, the ECB has already signaled we don't know what else to do. So it is the U.S. And, if we're starting with a figure of 1.9 trillion, and even if that's like I get everything I wanted for Christmas type figure, and it comes down from there, 1.9 trillion is a huge amount of wiggle room. So it is going to matter if it's 1.5 or if it's 900 and where that goes. So I think that's what markets are going to focus on. What do we get? Where does it go? How does it happen? Do we end up with reconciliation? What does that tell us about the future path and future relationships between Congress and the Biden administration? I think there's still a lot of uncertainty around that, and the market is going to reflect it.
Daniel Morris with us, and the joy as he continues with us, the chief market strategist for BNP Paribas. Love having him on. Really, really smart, direct notes. Futures negative 26, Dow futures negative 242. It is a pause. Coming up in the next hour, someone who has a terrific impact when attending Bloomberg Surveillance. Stephen Eisman will join us. Steve Eisman of Eisman Group at Neuberger Berman. Thrilled to have him on, really to get an update here on how he views the market, how he views our financial system. Stay with us. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen.
And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Karina Mitchell with the Bloomberg Business Flash. Bloomberg has learned that Samsung Electronics may spend more than $10 billion to build an advanced chip-making plant in Austin, Texas. That's a major investment the Korean firm hopes will win more American clients. It could also help Samsung catch up with industry leader Taiwan Semiconductor. In other news, shares of Intel are lower today. Incoming CEO Pat Gelsinger promised to regain the company's lead in chip manufacturing. That's contrary to what some investors are saying, that Intel should give up that part of the business. Gelsinger says that 2 years from now, most of the company's chips will be made in Intel factories. And Bitcoin trying to make a recovery. It's regained ground after slumping below 30,000 earlier today. The fall led to new questions about the sustainability of the cryptocurrency boom. Just after the new year began, Bitcoin reached a high of almost 42,000. It's now on track for one of its worst weeks since March. And Jamie Dimon went without a raise last year. JP Morgan kept its CEO's total compensation at $31.5 million, the same as it was in 2019. That includes a $25 million restricted stock award tied to performance. The bank's annual profit fell 20% in 2020. Still, JP Morgan made more money in the fourth quarter than it ever has in 3 months. And that is the Bloomberg Business Flash. Francine.
Thank you so much, Karina. There you go, 31.5 million, Tom. Who talks about inflation, right? Stocks in Europe are actually dipping. U.S. equity futures are seeing the same. Now, in the last couple of days, we did have a bit of a lift to the market because of the optimism that we had good earnings and also optimism on additional stimulus. Now, there are restrictions that may be here for longer, certainly in Europe, to curb COVID, and that's being, I guess, priced in a little bit. Crude oil declining for a second day, Tom.
Off of the comments of Madame Lagarde yesterday, this is just breaking German GDP, and this is important for this year. That growth moves a substantial amount from 4.4% to 3%. That is not a minor headline. Futures are negative 23. The VIX backs up 22.91. On the pandemic, Kathy Hochul of Buffalo.
found that for a typical clothes wash, up to 700,000 fibres could come off our clothes.
Permet de collecter environ 3 à 5 tonnes de déchets de PET chaque mois. Donc une partie est utilisée pour faire des bateaux, une autre partie pour faire d'autres poubelles et d'autres parties, bouteilles, sont plutôt stockées que nous fournissons à certains partenaires.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
The Governing Council decided to keep the key ECB interest rates unchanged. We will conduct net asset purchases under the PEP until at least the end of March 2022. An ambitious and coordinated fiscal stance remains critical. The risks surrounding the euro area growth outlook remain tilted to the downside, but less pronounced. Headline inflation is likely to increase in the coming months. We are monitoring very carefully exchange rates. So we are very attentive, and as I said earlier on, all instruments can be adjusted and nothing is off the table until the Governing Council judges that the coronavirus crisis phase is over. It's a balancing act.
That was the European Central Bank President Christine Lagarde speaking yesterday, of course, mentioning that double-dip recession could not happen in the EU. Now, Daniel Morris, Chief Market Strategist at BNP Paribas Asset Management, is still with us. Dan, when you listen to Christine Lagarde and her message about possible scarring, about possible inflation, how tough a time is it going to be generally for the ECB when the point comes to start normalizing interest rates?
Well, I guess it depends what your benchmark is going to be for that. And if it's anything near a target level of inflation, it could be quite a while. I mean, even before the pandemic, of course, the ECB had been struggling mightily to get anywhere close to its inflation target. We'll see whether we ultimately get a re-evaluation of that, similar to what the Fed did last year. But I think we would anticipate continued low rates, some form of quantitative easing really for another couple of years, because it's hard to imagine a scenario where you see a significant enough rebound in economic activity in the Eurozone to really start to push inflation up to a level that the ECB would really need to change its mandate, or change its policies.
What do you think is the biggest prescription for Europe? I mean, we have the recovery fund. How can we now make sure that countries don't actually squander that money? And is that what you're looking at to decide where you want to be invested in?
I think for Europe, you could argue that one advantage has been the delay in the distribution of the next generation EU funds. I mean, that 750 billion or so was approved last year, but it's only now slowly starting to be dispersed. But that means at least that money is going to be coming into the economy now. And I think a key distinction to keep in mind when you compare the U.S. to Europe is Europe already has much bigger automatic stabilizers for the economy in terms of either the furlough programs or unemployment benefits in a way that the U.S. traditionally hasn't. Now, that's been compensated to some degree by the big fiscal stimulus packages you've already had in the U.S., but to some degree, Europe didn't need it as much. So all this money that's come in now really should be with the potential for marginal improvement, not only to demand, but as you point out, hopefully to some structural changes that do increase the long-run growth rate. But these are issues that we've been aware of for a long time. I think we all have a long list of what needs to be done. Now, hopefully, there's so many there to put behind it, and we'll just have to watch very closely, particularly for those countries that have had relatively low growth rates and have now even higher debt burdens, whether or not they take advantage of this opportunity to retool the economy so that they can meet those burdens.
Daniel Morris, BNP Paribas has a heritage of mathematics and derivative analysis. Where are the excesses in the market right now? What is the excess that mathematically concerns you?
I think one thing you've got to think about is, in the past when we looked at, say, regional allocations, generally, say, Europe always looked cheap relative to the U.S., and that was one of the key arguments, say, if we're overweighting European equities. Nonetheless, U.S. equities just outperform pretty much year after year, so we all appreciate that valuations are not sufficient to make an asset allocation. I think one thing that's different now, though, is that you can argue that Europe really isn't so cheap anymore. So I think that is the challenge for us if we look at comparative valuations. I mean, it's certainly still less than U.S., but you don't have that absolute discount to long-run averages that you historically have had in Europe for years. So I think that's the issue, what's happening with earnings. I mean, if you look at EPS for MSCI Europe, it's actually still below the level you had before the global financial crisis. It hasn't recovered that earnings over the last 12 years, whereas the U.S., it's probably double. So I think those are some of the fundamental issues we have to address. What is their earnings potential for European companies, and then particularly now, what is the multiple we're paying for that growth, such as it is?
Daniel Morris, Bloomberg Intelligence reaffirmed, Poonam Goyal and the others, many of the big tech companies with terrific revenue growth in this last quarter of 2020. Can BNP Paribas say the same, that revenue and earnings dynamics in the U.S. are constructive?
Oh, certainly. I think there's no question that the momentum and the trajectory is all very positive. If you look at earnings revisions over the last month, it's running 3-to-1 positive over negative earnings revisions in the U.S. So that's all fantastic. But then there's the point where you say, what have you done for me lately? And, it's not going to stay at that type of ratio indefinitely. A lot of it is just the turnaround that we've had over the last month or so in terms of the election outcome and so on. So that momentum is there. It's what's going to be that growth rate and earnings expectations 6 months from now. And then are valuations today too lofty relative to what that growth rate is likely to be?
Daniel, Francine says to me every single morning, what have you done for me lately? Happens every morning.
Actually, I always ask you, what can you do for the team, Tom? But it's a slight variation that just makes the story a little bit better. Thank you so much, Daniel Morris, BNP Paribas Asset Management Chief Market Strategist. Now let's get straight to the Bloomberg First Word News in New York City. Here's Karina Mitchell. Hi, Karina.
Okay, Francine. Hospitals are getting a break in much of the U.S. Coronavirus cases are declining in 46 states. In 42 of those, the 7-day case average has fallen more than 10% from a week earlier. Still, the U.S. hasn't yet seen the full fallout from earlier infections, and deaths are likely to keep rising at a rapid pace. Meanwhile, Senate Republican leader Mitch McConnell wants to put off Donald Trump's impeachment trial until next month. McConnell says that will give the former president time to work on his defense. The start of the trial is in limbo until House Speaker Nancy Pelosi formally transmits the single article of impeachment to the Senate. And it may be the oil market's worst-kept secret. Millions of barrels of Venezuelan heavy crude have been surreptitiously going to China. That violates a U.S. embargo. Bloomberg has looked at invoices and emails. They show the lengths to which traders are going to disguise the oil's origin. They involve shell companies, ship-to-ship transfers, and adding chemicals to the oil to disguise its origin. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Francine.
Thank you so much, Karina. Now, coming up next, the president of the African Development Bank, Akinwumi Adesina, and the UK Trade Commissioner for Africa, Emma Wade-Smith. We talk about the UK and Africa relationship and transactions. This is Bloomberg.
has been interrupted. Uninterrupted service is peace of mind. Kimi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Their CPG history, their experience as a fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Tom Keane in New York. Tom, the UK hosted the Africa Investment Conference this week, bringing together UK and African businesses to explore the opportunities for partnerships and investment post-Brexit. Now, joining us is Akinwumi Adesina, African Development Bank President, and Emma Wade-Smith, the UK Trade Commissioner for Africa. Thank you both for joining us. Now, there's a lot to talk about, including some of the deals that have been signed and that have not been signed. But Dr. Adesina, maybe let's just start on, if you look at Africa, and of course it's various countries, so very different ways of dealing also with COVID and the trade relationship with the UK, but how much of the COVID will actually impact the necessity to do more trade more quickly with other parts of the world?
Well, actually, the COVID has quite a lot of impact in Africa. Growth had come down by, minus 2.1% last year. But although we now say that it's going to go back to about 3.4%, for this year. The foreign direct investment, unfortunately, had been actually badly affected. Our foreign direct investment went down from $45 billion in 2019 to, roughly $27 billion by last year. So the opportunities are immense as the world goes back in terms of opening up the lockdowns and making sure that trade and investment can continue, mergers and acquisitions can continue. The fact is Africa still retains the same fundamentals that allowed it to have 5 or 6 of the 10 fastest growing economies in the world pre-COVID. So those things are still there in terms of macroeconomic stability, the size of the economies, you go 1.3 billion size of people, and 1 out of 5 people by 2050 will be, in terms of demand, will be in Africa. So those things are actually still there. We still have now the Africa Continental Free Trade Area, which opens up an Africa GDP collective of $3.3 trillion. So you cannot ignore Africa. So basically the opportunities for trade, for investment are there. The fundamentals are still there. It's like you went off a highway on a detour. We're going to get back right on it and continue to do what we've been doing. I think Africa presents itself as a market that cannot be ignored.
Emma Wade-Smith, when you look at some of the countries that are actually first in line to have some kind of trade agreement with the UK, who are you targeting first?
Well, we've spent the last few years working really hard across the continent to ensure that we've got continuity of trading arrangements. And we did a tremendous job, in my view, to achieve so much of that agenda by the 1st of January, when we officially were no longer a member of the European Union and the Customs Union. And so we're working really hard to make sure that now we have those bilateral arrangements, we are utilising those and we are implementing them effectively, with a view really to engaging across the continent with like-minded governments to see how do we build from here. The UK is absolutely an open free trade champion around the world, and we want to see that manifest itself even more across the African continent. And we heard there from Dr. Adesina about the Continental Free Trade Area and how vital that is going to be to unlock some of that inter-African trade. And we also want to be encouraging more African businesses to be trading with the rest of the world. And of course, from my perspective, more with the UK.
Dr. Adesina, Dr. Wade, good morning. Tom Keeney in New York. Dr. Adesina, you hold the Oxford, Cambridge, Harvard Holy Grail of agricultural economics, which is a PhD from Purdue University. I believe it's in the state of Indiana. Dr. Adesina, I want to talk to you and link trade and the efforts you're doing with the simple need for a comprehensive water plan across Africa. Link together the age-old problem of water management with jump-starting trade in Africa.
Well, basically, the thing is, Africa is, when it comes to the issue of water, agriculture is often very, very important. The size of the food and agricultural market in Africa will be roughly $1 trillion, by 2030. So that is, agriculture is the key, and you have a rapidly growing population. And Africa has 65% of all the arable land left to fill the world by 2050. So what Africa does with agriculture and how it does it is really going to determine the future of food in the world. Now, it's not just water, but you got to look at technology. You got to look at the value chains for transformation. So Africa is not exporting raw materials all the time. Today, you got Africa, with 75% of the global supply of cocoa beans. But we only get 2%. Of about $120 billion of the chocolate market every year. And that's not the way to do trade. Mm-hmm. And so we are going to work a lot on that. But water, in terms of what you said, is climate change. Africa is badly affected by climate change. You see a lot of challenges with drought in many places. So the key really is to make sure that we can grow Africa's agricultural systems in a more climate resilient manner. So the issue of water management becomes very, very important. And the issue of water efficiency, various technologies to allow that. We have a technology, by the way, that is called water efficient maize for Africa, that now allows farmers to grow maize in drought tolerant and in drought environments. We also have something called technologies for African agricultural transformation that has provided for Sudan and Ethiopia heat tolerant wheat varieties. You know very well that wheat is growing in temperate environments. But now we have wheat varieties that grow in very hot environment. And now we provided that to Sudan in 2019. And I tell you, it's allowed them to be able to almost reach half of their self-sufficiency in wheat production. So the point is, you need R&D, you need infrastructure, you need good value chains, but you also need to have climate resilience to make all this work.
Ms. Wade-Smith, what is the new trade dynamic for the developed world? I think of the American debate of Bill Easterly at NYU and Jeff Sachs at Columbia arguing about the deployment of our assets to jumpstart African growth. What's the new theory that works right now?
Well, look, I'm not sure if it's a new theory, but I think really what I see is at the heart of all of this is people. So on the one hand, we're talking about jobs. And if we don't increase the flow of investment into Africa and through Africa, if we don't increase the trade flows to and from the African continent, then we're not going to realize the great potential we have to create and sustain more jobs for the people who are coming into the workforce. And that's absolutely critical and has become even more central to our effort as a result of the pandemic and what we're seeing in terms of the economic damage there. But also we're talking about partnerships. And one of the issues that came out so clearly for me at our conference earlier this week, and indeed at the summit we had last year, was this point about going together and bringing together the innovation that we see in Africa with the innovation that we see in the UK, and bringing people together to really make the most of different perspectives, different capitalization and different solutions for the problems that we face.
Thank you both for joining us today. Akinwumi Adesina, their African Development Bank President, and Emma Wade-Smith, UK Trade Commissioner for Africa. Now, coming up on Balance of Power, Ian Bremmer, Eurasia Group President and Founder. That interview at 12:30 p.m. New York time, 5:30 p.m. in London. They'll talk about the inauguration. They'll talk about executive orders and, of course, foreign policy. This is Bloomberg.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Bloomberg Surveillance on a Friday. Francine Lacroix, Tom Keene. We're all getting used to the new method. I just read through the effort today of the Biden administration toward their new normalcy, a really traditional day on an agenda with the vice president and the president sharing many meetings together. Part of it is the 5 a.m. announcements, and of course the lead off there with this horrific pandemic. The Nobel laureate Joseph Stiglitz of Columbia has been a sharp critic of Mr. Trump and the plans of the last 9 months. Let us listen to Joe Stiglitz.
Unfortunately, the United States didn't have leadership at the top, and we didn't get the kind of program that worked in some of the other countries like New Zealand and Denmark. And the result of that is we had this enormous spike in unemployment, and as the numbers today point out, another 900,000 people in unemployment and another almost 500,000 under the special program for the self-employed whose incomes have plummeted. So those are drastic numbers. So you're right. What we're going to have to, we will be worried, should be worried about. Will there be this long-term scarring? I'm hopeful that as the economy picks up again, many of these people will naturally get rehired. But I think we'll have to have some, what we call active labor programs to help retrain workers. One of the things that's going to be happening is there may be some restructuring of our economy. We know that. We need that. But whenever there's restructuring, you have to give some assistance to enable people who will move from the sectors that are the sectors of the past, like the fossil fuel, into the sectors, the new sectors, like renewable energy and the caring sectors.
Professor Stiglitz, obviously a major priority is going to be getting back to pre-crisis levels of activity. But then the bigger question is, what is the longer-term trajectory? How does the economy reverse some of the deepening trends of inequality that we were seeing long before the coronavirus hit, long before people were talking about K-shaped recoveries and so on? We know that's something that's on the administration's mind. From a legislative standpoint, what would be the key thing in your view that the White House should pursue such that the post-crisis economy doesn't look like the pre-crisis, the strains that we were seeing pre-crisis?
I mean, you're absolutely right. We don't want to go back to where we were in January 2020. We want to, as President Biden says, we want to build back better. And part of building back better is to build back with less inequality. Well, actually, in his speech last Thursday, he outlined two measures that are important. One is increasing the minimum wage. It's really quite remarkable. Most Americans don't realize that adjusted for inflation, the minimum wage in the United States today is the same level that it was roughly 65 years ago. Can you imagine? No pay raise in 65 years? And the evidence is that we could, it would be good for our economy to have that kind of increase in the minimum wage. It won't cause a loss of job. It'll actually stimulate the economy.
Well, that was Nobel laureate Joseph Stiglitz speaking with Bloomberg on the long-term damage from the coronavirus pandemic. He was in conversation with our Joe Weisenthal. In the meantime, this is what the market is looking at. So there does seem to be an uneasiness, a resurgence of the virus making stocks actually go down a touch. They're sliding along with U.S. equity futures. It's been denting some of the optimism that we saw over earnings, also denting some of the optimism that we saw with additional stimulus. I'm looking at dollar strengthening for the first time this week. I'm also looking at some of the German bunds and then British pound weakening after the Prime Minister Boris Johnson said the UK's third lockdown could last into the summer. We also had some disappointing economic data adding to investor misgivings. Tom, lockdown until the summer. That's a
Well, like, you know, the day-to-day movement here, and finally we pull back on the inauguration. I would suggest off the Biden victory of November 3rd, or appeared to be a victory, then SPX up 18%, Francine. So we have come awfully far, awfully fast. We will discuss that theme with Stephen Eisman of Eisman Group, really one of our most popular guests. Gets a huge response when he's on. We've got him for a good amount of time. We'll talk to Mr. Eisman here about all sorts of issues, including American banking and finance. And yes, we will talk to him about the big and the little shorts as well. Futures deteriorate, -27. Dow futures, -254. The VIX comes back two big figures, 1.87 points. 23.19 after the 2-3-day Biden celebration. In the yield space, yields come in again, 1.09 on the 10-year yield. Please stay with us. A Friday to recalibrate forward in 2021. This is Bloomberg. This morning, finally, a post-inaugural pause as stock futures retreat. Call it a reassessment of the scope and scale of this 2020 and now 2021 pandemic. President changed, but Dr. Fauci is the same. He insists, let the science speak. Let transparency and honesty speak. President Biden extrapolates out to 500,000 deaths. And well, it is the great debate. It's about the great moderation, the age of disinflation in your portfolio. Stephen Eisman in this hour. Good morning, everyone. Bloomberg surveillance from New York, from London. Mr. Biden out with announcements at 5 a.m. as well, and much of it centered around, Francine, at least here, about a reassessment of where we are in this pandemic. We've been distracted the last number of weeks or so, and I really get the feeling, Francine, today is sort of a day of reassessment at 400,000 deaths in America and what is to be done next.
Right, reassessment and trying to accelerate. And of course, again, you're trying to vaccinate a large number of the population right at the time when infections are going up as well, Tom. But of course, it was quite sobering listening to Dr. Anthony Fauci saying how this Biden administration will be different to the previous one. Tom, I was really excited for you because I know you got the vaccine yesterday.
And survived.
I think it was yesterday in the morning. How was it?
It was really interesting, and there were some real surprises to it as well. You know Ken Langone, who joins us from time to time. This is his contribution to New York University, and his New York, the founder of Home Depot. And this incredible video done secretly at New York. Walter, the nurse, is giving me the jab. I'm being distracted by shopping at Dolce & Gabbana or something. Didn't hurt at all. I was more hurt by the shopping. But seriously.
Were you in and out?
I was relatively in and out in an incredibly busy manufacturing operation. What I learned yesterday, Francine, is the intensity and the focus of the hospital workers making this happen. Yeah. Because it's simple. You go in, you get the shot, you move on. But it's the hundreds of people doing it, and the intensity and seriousness of intent really surprised me.
And Tom, you know, I live in the UK. The approach of the UK is slightly different. So they're trying to give that first shot to as many people as you can. But of course, you need 2 shots if you take the Pfizer vaccine to be vaccinated, to be immune to COVID-19. And they're basically elongating the time. So I know you should be getting your second shot, in 3-4 weeks. Here
19
in the UK,
days.
They're doing it 10 to 12 weeks after that first shot. It's just it's a different approach.
Yeah, I got the little white card in my wallet, and it's 19 days out. And what I can say, folks, and many of you know this is what I studied in school, and a lot of the tales that are out there, the fears that are out there, Francine, are fears that will be overcome by just seeing people go out and do it. Get out there, get your vaccine, and tell people about it, and that's the quickest way to get this done. We are advantage right now. Futures negative 26. We'll get to the data in a moment. Joining us now, Chief Vaccination Correspondent Martin Schenker of a certain persuasion, where, Marty, you have already had the vaccine as well. I think you're ahead of me on the schedule. This is a societal thing. It's not about politics, Biden, Fauci, Trump. It's a societal fear that we have to overcome.
Yeah, there's a number of people, especially in minority communities, are quite suspicious about the vaccine and actually resistant to take it. So the more that we can tell people that the vaccine is safe and very few side effects, and that it's a public duty to take the vaccine, the better.
I wore PF flyers, you wore Keds, but we both wore thick corduroy whale pants. Do you remember lining up in the fear of those pink drops in our mouths in the late 50s?
The Salt vaccine, the Sabin vaccine, actually my sister still has the card.
Very cool.
Shows that she got the polio vaccine in 1956.
And I will remember, Francine, and this is so important, the mothers in tears over the immediacy of older children that had been infected by polio. It was really something.
You know, that was an active polio virus you were taking, and there were some instances of people contracting polio, but it is eradicated from the U.S., and it clearly was one of the most successful vaccination programs in the history.
Marty, yesterday, you know, we were all listening to Anthony Fauci, and it was a very, very different press conference than, you know, what we had under President Trump. Does it make a difference to incentivizing people to reach out and go and get vaccinated, to listen to science?
I think that ultimately it will make a difference. It's not going to happen overnight. I mean, the absence of this kind of information in the previous administration and allowing the anti-vaccine movement to take hold, it can't be understated how Anthony Fauci can actually turn that around. And it will take time. It will not be overnight, but I do think it's going to have an impact.
Marty, you said it Wednesday, you said it Thursday. The only way that the Biden administration, takes hold of the situation is to vaccinate more people. How will the one-dose vaccination actually change everything for the U.S., given the distribution and the complexities of the cold chain?
Well, one of the things Dr. Fauci said yesterday at his press conference was he's pretty confident that they'll be able to do 100 million vaccinations in this country in the first 100 days, which will be a huge step towards getting some semblance of herd immunity in the summer sometime. So I think that as long as that coordinated with the plans to try to increase the actual vaccine manufacturing, which we'll see in the next few weeks and months, is the key. Can you manufacture enough vaccine?
Marty, the shock to me, and I guess I knew this was coming, but I just wasn't prepared for it, is the back to normalcy of the press releases that we get at 5 a.m. and through the day. And what I see in this morning's press release of what the president will do today is a linkage every paragraph between him and the vice president, and also the use of the first floor of the White House, the state dining room, which is a smaller room, folks, not the big East room. They're going to move from the Oval Office as we see Mr. Biden signing documents. Yesterday, the state dining room was with Jefferson's private office. And then Teddy Roosevelt took it over and put mooses on the wall. No mooses on the wall now.
You covered that, Tom, didn't you?
I covered that. Just link in there. What is the symbolism of how a president sets up his press relations and occupies that first floor for work?
I think it can't be overstated how significantly different it is from a previous administration. There is an air of competency that has circulated in the White House over the next couple of days. I think the press, and us included, are having to try to make sure that we are not being overly kind and that we have to be as critical as we were with the previous administration. But there's no doubt that the information and the trust factor is much higher now than it was ever in the Trump administration.
Surveillance Break exclusive. I just went down to the bottom of President Biden's team's press release, and they misspelled president within the word the vice president. So even they are up to making mistakes as well.
No spell check there, I guess.
No spell check there on President. Marty Schenker, what do you expect to see from Mr. Biden as he staggers through his first week? Where do we get to when this first days is over?
The key issue is really not so much Joe Biden, it's Mitch McConnell and Chuck Schumer. And their ability to work out a power sharing agreement in the Senate is going to say volumes about whether this impeachment trial goes forward in February and allows Biden's cabinet picks and his economic agenda to get addressed in Congress. And I think that's the thing to watch over the next few days and weeks.
Marty, I can't remember. We were speaking to a political expert who was saying it will take at least 12 to 18 months to realize whether the Trump administration was a blip in history or whether the Biden administration is a blip in history, and then we go back to something more resembling what we had in 2020. What will make the difference for Joe Biden? Is it only the COVID-19 that he has to get a handle, or is it really inequality that will kind of change the path for the U.S.?
Well, with all deference to a political expert, I don't think 12 or 18 weeks is the arc of history you need to use to figure out just how Joe Biden fits in presidential politics and efficacy. So I think it's all of those things. It's the confluence of many crises, economic, health, political, that Joe Biden is going to have to handle in a deft way, and it will take more than just a few months to figure out whether he's able to do it.
20 seconds. Packers, Chiefs? Boring? Packers, got it?
Yeah.
Come on, Bills. I got Kathy Hochul on, Lieutenant Governor of the Empire State. Give me some Bills love, please.
Well, I mean, I actually did not pick the Bills last week, which was a big mistake in my pool, So
that means you can never retire, right?
That's right. It means an extra 3 months of work.
Very good. Marty Schenker, thank you so much. Managing editor of All We Do Here and chief vaccination technologist. Right now, our first word news in New York City is Karina Mitchell.
Tom, good morning to you. The Biden administration is trying to get Republicans on board for the president's coronavirus relief plan. His top economic advisor, Brian Deese, plans to meet with a bipartisan group of lawmakers to push for that bill. But the measure's $1.9 trillion price tag has led to growing opposition from some Republicans. And President Biden's pick for Treasury Secretary is leaving the door open to a tax increase. Janet Yellen says she would work with lawmakers to fast-track a series of tax hikes on corporations and wealthy Americans. The money would be used on infrastructure and expanding the social safety net. And infectious disease expert Anthony Fauci says it feels somewhat liberating to work with the new president. That's after Donald Trump often tried to sideline him in the fight against the virus. Fauci admitted he had to contradict the former president at times, such as when he advocated for the use of an unproven malaria drug to treat the virus. European Union leaders are painting a bleak picture of the virus. They warn mutant strains will lead to longer and possibly stricter lockdowns. And there is no clear sense of when the restrictions will be lifted. Governments across the EU are struggling once again with rising numbers of infections and fatalities. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Francine.
Thank you so much, Karina. This is what the market is looking at. So we're seeing a bit of pressure on stocks, both in futures and European stocks. They worry about the extra lockdowns here in Europe. They also worry about some of the projections of what kind of scarring we could see in the economy. So that is a bit of a different position to the optimism that we saw just 2 days ago on earnings and plans for additional stimulus. And then a couple of other things, Tom, I'm looking at. You can see German bunds edging lower. There is a bit of movement on Italian bonds after reports of Prime Minister Giuseppe Conte could consider early elections. And then, of course, it's Bitcoin, 31,900, a bit more stable, certainly, than it was 24 hours ago.
Yeah, a bit more stable. I believe we got an under 30,000 print on Bitcoin, and that is of note. It certainly lit up the Bitcoin supporters and detractors as well. Futures negative 29. There is a deterioration in the tape in the last 90 minutes with the VIX coming out near two big figures, 23.21 from the enthusiasms yesterday. I do want to point out within the data the story of IBM. We're going to have a chart coming up here, I hope, that shows you the shocking failure of IBM over the last 22 years. We'll do that with Stephen Eisman as well. Coming up in a perfect time to speak to Kathy Hochul about one state's response to this horrific pandemic, the Lieutenant Governor of New York, and possibly her comments as the bills travel to Kansas City. This is Bloomberg. Good morning.
Continues to be, recovering well. And with the opening up that was decided at the last 5-year plan, that is a golden opportunity for many international banks.
So we'll look to double our footprint across IB and also wealth management and asset management in the 3 to 5 year time frame.
Growth outlook structurally is very strong. But it does need to consolidate and allow time to help the share price appreciation to move more in sync with the growth.
So China can avoid further decoupling if they stop these inappropriate actions.
But at the moment, we really want to see the dust settle first on international relationships, on China's role in the global economy.
I don't see a likelihood of a big change in the policy with the change of administrations.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Bloomberg surveillance, good morning from London, from New York. Tape deterioration, futures at negative 29, Dow futures negative 271. Francine Lequan, Tom Keene with a conversation that clearly we should lead off with on January 4, whatever the first day is of the year. Because of our schedule, his schedule, and just the news flow of it, we are advantaged to get a little later into the year a conversation with Steve Eisman of the Eisman Group with Neuberger Berman on these equity markets. Steve Eisman, how are you positioned right now?
Pretty long, about as long as I can be. I'm alongside combination of tech growth plus some cyclicals, mostly financials, large cap financials, some large banks, some life insurance. And on the short side, highly selective, very idiosyncratic.
Steve, the great debate here, and particularly those pushing against the banks that have had a heck of a move, is the interest rate call. In your equity analysis, do you really look at the interest rate call? Is it separate and discrete, or do you fold that right into your study?
I mean, anybody who thinks you can invest in banks and have no view on interest rates is dreaming. So part of my call is just that, look, I think at some point this year, we're going to get vaccinated, the economy will return to normal, and I think rates will be higher. But the more important part of the call is, I think the banks came through this financial crisis, this pandemic crisis, in great shape. They didn't lose money, despite the fact that they had a new accounting rule that required them to provision for losses much more aggressively. Nobody raised any capital. The changes that were made post Dodd-Frank worked. So I think there's a potential here for the banks to be somewhat revalued as they've proven that they can withstand a real crisis.
So, Steve, do you worry, and good morning, do you worry at all about zombie companies or some of the loans going sour when some of the cheap money is taken away?
Yeah, when's that going to be?
You tell me.
I'm serious. I don't know, but it doesn't seem to be anytime soon. That's obviously a risk, but given the people who run the Fed today, I don't see that as a risk happening anytime soon.
When you talk about revaluing maybe some of the banks, is this Wall Street banks, or do you feel the same way about some of the European banks that have a whole other set of problems?
I mean, look, the European banks did okay coming through this pandemic, but they're not as well run as the U.S. banks. They're not as well capitalized. Could they get revalued? Possibly, but I'd rather own the banks in the United States.
Steve Eisman, I want to talk to you about rotation, the cookie-cutter institutional process, and all of us at Bloomberg hear this from our guests constantly, is you need to rebalance, you need to rotate. And right now the rotation is out of technology over to cyclical as well. I'm hearing you say you're really not a rotation guy. What are your thoughts on the certitude, the theory, if you will, that you need to rotate?
Well, I do think you need to rotate on the margin. You just can't sit there. I mean, you could take a very, very long-term perspective and just say, I like growth stocks and just own them forever. And that's obviously been the right call for the last 10 years. On the margin, I tend to rotate somewhat. I think, assuming the economy does do well post-vaccination, there's a real chance here for cyclicals to do well for a while. But, over the long term, I still think that you need to have more capital in growth stocks, especially given the fact that we live in the age of disruption.
Right. Steve Eisman, I want to introduce a chart which is painful. It is the death of international business machines. Terrible numbers yesterday. They're down substantially this morning. And where they are after one leg up in the 90s, one leg up in the aughts, is they are back to where they were in 1999. Steve Eisman, how do you discern an IBM coming down the road? How do you figure out the next IBM?
Yeah, I always ask them the easy questions. Look, I mean, sometimes technology companies get old. It's hard to figure out who that is. I'm not going to make a prediction about who I think the next, Intel, is potentially that. I mean, it evolves over time. It's hard to predict. Obviously, IBM is a test case, but it doesn't seem like they have it. They're solving their problems.
We'll continue with Stephen Eisman. He's with the Eisman Group, Neuberger Berman, as well. Really dive into some of the trends that he sees. And yes, we must touch on those shorts, big and little here, with Mr. Eisman. Futures are negative 29. They deteriorate after 2-3 days up. It's amazing how out front this move has been. We forget how much distance has been taken since November 3rd. Coming up in the open from Cambridge, and Bloomberg opinion columnist Mohammed El-Arian. This is Bloomberg. Good morning.
Y ver cómo te tiran algún objeto o cómo notas la sensación, ¿no? Como que te golpean a ti. O yo creo que hace que empatices mucho con los personajes y que sea todo mucho más real.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Surveillance. I'm Karina Mitchell with the Bloomberg Business Flash. Bloomberg has learned that Samsung Electronics may spend more than $10 billion to build an advanced chip-making plant in Austin, Texas. That's a major investment the Korean firm hopes will win more American clients. It could also help Samsung catch up with industry leader Taiwan Semiconductor. And a sales recovery in the second half of the year led to strong annual earnings at Volkswagen. Operating profit came in at $12.2 billion. The pandemic forced VW suspend production temporarily last spring. And that is the Bloomberg Business Flash. Tom, back to you.
Karina, thanks so much. A pause out there, folks. Negative 29 on futures. The VIX 23.50 out over two big figures. That gets your attention. Currency space, not much happening. Sterling 136.65 goes down from the lofty levels Francine Lacroix noted yesterday.
Yeah, the British pound, Tom, definitely weakening after the Prime Minister said that the UK's third lockdown, and I have to say it's a pretty intense lockdown, although not everyone respects it, could last into the summer. We also had some pretty disappointing economic data. That's been adding to investor misgivings on a pound. And then also Italian stocks. Italian stocks underperforming a little bit. Bond yields rising after reports that we could have early elections, something that just 2 days ago we weren't really talking about that so much. Now, coming up on Balance of Power, Ian Bremmer, Eurasia Group President and founder. That's with our David Weston, and the interview 12:30 p.m. in New York. That's 5:30 p.m. in London. I know they'll talk about Biden's policies. I know they'll also talk about the G0 world and maybe this bipolar world, China versus U.S. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I think he must continue to sign executive orders if the recalcitrants continue over in the Senate.
Joe Biden starts with canceling the Keystone pipeline when he talks about rejoining the Paris Climate Accord. These are issues that spook the private sector. These are issues that we feel hold the private sector back.
Working families have been ignored by both parties for way too long. And so I'm hoping that Mr. Biden and Janet Yellen and others of his team are really going to be refocused on this.
You can't solve every social problem, the environment, everything simply by running deficits. At some point, you have to make choices.
Ken Rogoff there with spirited comments. Thank you to Eric Nielsen and Kenneth Rogoff yesterday for heated comments on Bitcoin. We'll try to touch on that with Mr. Eisman. Steve Eisman with us from Neuberger Berman. Steve, it's maybe not evident on TV or radio, but I have been a harsh critic of people shopping short ideas. You, and forget about the movie Acclaim, have always been incredibly graceful of setting up why you are shorting a position. Describe a present short position with the Eisman grace.
I don't know if I'll be so graceful on this one. So this is my largest short. It's a company called Credit Acceptance. CACC is the symbol. It's probably the largest subprime auto lender in the United States. Let me make it very clear, this is not a short on thinking that the company is going to suffer credit losses. It has nothing to do with it. This is a pure regulatory story. For anyone who's interested, the company was sued by the Massachusetts Attorney General in the summer of 2020 for predatory lending practices. The complaint is an unbelievable document, incredibly detailed, providing a litany of predatory lending practices that are, the only way to describe it is disgusting. And with a new head of the Consumer Financial Protection Bureau going to take charge soon, I think there's a potential here for this company to be regulated into a much, much lower level of profitability at the very least.
When you look, Steve Eisman, at CACC and what they're doing, we say good morning to them in Southfield, Michigan, Brett Roberts and Kenneth Booth. Do you speak to the company about your criticisms? Do you communicate with the company?
In this case, I have no interest in talking to the company. I simply look at the complaint by the Massachusetts Attorney General under the assumption that the complaint is accurate. This company is going to suffer a lot of regulatory changes. That's my simple thesis, and I don't see any point in this case of talking to the company about it because they'll just deny it, so there's nothing to discuss.
Stephen, is there a part to the market? So we talked about U.S. banks. You like U.S. banks. You just talked about a company that you're shorting. Is there another, more of an industry or an asset class that you think is just running too hot right now?
I mean, we could have an academic discussion about, stocks that I think are overvalued. But, the problem is that as long as the Fed keeps rates at zero and money is free, I think that discussion is academic. I never short a stock just because I think it's overvalued. In an age of disruption, I think that's a recipe for disaster.
Yeah. I know, Steve, that Tom wants to talk about Bitcoin, but you did write a 2016 essay in the New York Times saying that actually income inequality is the big problem of our times. How does it factor into your thinking in 2021?
I mean, look, that's my personal political view. It doesn't really impact my view of investing unless something happens politically that changes policy. We'll see if this administration does anything aggressively about it. But, my feeling is that what this administration is going to do first is do a lot of fiscal stimulus, a lot of infrastructure spending, and only later will they start to deal with the tax code. So I think that's tomorrow's business.
Steve, I was reading Variety. They were flogging the Queen's Gambit on the cover, and, they're talking up the next movie is going to be the big Bitcoin. Your thoughts on Bitcoin? The economists, as a general rule, are scathing about how governments will step in and regulate Bitcoin to a lower price point as well. Many of the banks are really beginning to experiment and figure out what to do with it. What does Steve Eisman do with a big Bitcoin?
Steve Eisman does nothing with the big Bitcoin. I stay out of it. I don't understand it. Is it possible that it'll be regulated to a lower price. It's certainly possible, but I haven't seen anything that would cause me to think so. So I think the better part of valor here is to just stay away. I don't understand it. I don't know how to value it. And when I don't understand something, I just don't get involved.
Do you think it's a legitimate market? And by that, Steve, I mean, you know, you're in Neuberger Berman and you got your Bloomberg terminal, the symbol's XBT currency. Do you have any belief that it's a legit bid or ask, or is it manufactured?
I mean, there's a bid ask. There are people that are buying or selling, but I think they're buying, my personal opinion is I think they're buying or selling something that's impossible to value. So, you know, it's one thing to talk about what's the US dollar yen valuation. You know, when you're talking about Bitcoin, I think it's more like talking about how many angels dance on the head of a pin. I mean, I don't know how to answer the question.
Where do you see, Stephen, and you know, just to note to everyone, we are out to a credit acceptance for a comment after what you said and the fact that you're shorting the company. But Stephen, what does dollar do from here? So, you know, if we get back to something that maybe is easier to value than Bitcoin.
I mean, look, you know, this is one thing. I mean, valuing the dollar is easier than valuing Bitcoin. I find the cold currency world, generally speaking, a difficult world. I don't do anything in currency. Whenever I invest overseas, I always hedge the currency 100%. So it's just not something that I ever have a very strong opinion about one way or the other.
Steve Eisman, one final question, I think very, very important, and it's just understood you or Neuberger Berman could set up your own process to do a SPAC, to do these new structures of IPOs. We're miles away from lunches at the Hilton. What do you think about the new manufacture of speculation to bring companies public?
I mean, it scares me a little bit that you know, it seems to have circumvented in some ways the whole IPO process.
Yep.
Which, you know, the 33 and 34 Act that created basically our entire regulatory structure has done a very good job. I think it'll be very interesting to see what the new head of the SEC, Gary Gensler, does about it. You know, I think Gary's a very good choice. I know him a little bit. And we'll see if he addresses it. But until somebody addresses it, it's going to go on.
Well, Steve, this is right where I wanted to go. Mr. Gensler, widely presumed to come in and take a tougher tone. Did these SPACs occur because of a laissez-faire structure of the Trump administration?
No, I don't. Maybe to a degree. I mean, the head of the SEC. Under Trump took a very laissez-faire attitude, but I think that's part of it. But I think more importantly, it's a function of the free money out there and the license that the Fed has given people to speculate at will.
Very good. Steve Eisman, generous of your time today. Greatly appreciate it with Neuberger Berman. And as Francine mentioned, I do want to say, folks, that we at Bloomberg have an entire process of how we deal with shorting comments on air. It's a very constructive process, and part of that is we will reach out to Credit Acceptance Corporation of Southfield, Michigan, for them to comment on Mr. Eisman's shorting of the selected stock. With our first word news in New York, here's Karina Mitchell.
Okay, Tom, thank you. Hospitals are getting a break in most of the U.S. Coronavirus cases are declining in 46 states. In 42 of those, the 7-day case average has fallen more than 10% from a week earlier. Still, the U.S. hasn't yet seen the full fallout from earlier infections, and deaths are likely to keep rising at a rapid pace. Meanwhile, Republicans in Congress are showing little appetite for another virus stimulus bill. President Biden's top economic advisor, Brian Deese, will meet with a bipartisan group of lawmakers to push for the measure. Some Republicans say it's difficult to justify the bill's $1.9 trillion price tag since Congress recently passed a $900 billion relief package. Bankers in London are being told to face the facts. Any post-Brexit deal with the EU for the financial industry is a distant prospect. We spoke with the EU's Financial Services Commissioner.
There is no recreating the single market for financial services for the United Kingdom when they have decided to leave the single market. So what I'm saying here very clearly is change is coming.
McGuinness says it is inevitable that Brexit will hinder access to the EU for British bankers. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Francine.
Thank you so much, Karina. Now, up next, we continue to track COVID-19 with Andrew Pekosh. He's Johns Hopkins Bloomberg School of Public Health professor and virologist. That's coming up shortly, and this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Bloomberg Surveillance, good morning. Francine Lacroix and Tom Keene, thrilled that you're with us this morning. There is so much to talk about here with all the distractions in Washington. Seems like it's been just 2 weeks of real tilt to the politics of America. And this morning with a market reset, we really look at the politics and the medicine of this pandemic. The numbers, as you know, are jaw-dropping. There's different ways to look at it, different geographies. Hong Kong and substantial lockdown, I believe, in Kowloon this morning. Germany with some difficult numbers. Monitoring this in Brussels are Maria Tadeo. Maria, what is the European distinction on this Friday of this pandemic?
Well, Tom, what I would say is that they are now prepping the ground for another lockdown. This has huge implications for the public, of course, but now if you look at every government in Europe, they all agreed the outlook now is very bleak, it's downbeat, and they worry a lot about mutations, and that may mean more restrictions are to come. And this is a huge whiplash, Tom, because just a few weeks ago, this was a celebration. It was excitement. We had the vaccine. You remember the media circus that the European Commission put on with the vaccination day. Well, now they say we can forget about that and really perhaps go back into something that looks like a full lockdown for longer. And again, it's that concern on the mutations. The UK mutation also, Tom, really serving as a cautionary tale for the Europeans. We know that Angela Merkel really looks at the mutations, and that's what she really cares about. And that's something that she repeated yesterday to European leaders.
Are lockdowns the same country to country?
They're not, and that's an issue, Tom, because as you know, in the European Union, if you have a European passport, it doesn't matter the country that you're from, but if you're a citizen from the European Union, you're able to move freely. The freedom of movement is regarded as one of the fundamental freedoms of the EU, but if you're in Germany right now, you're not able to go into anything that is non-essential. If you're in Italy, that depends on the region. If you're in Spain, you can go to a restaurant, and that's creating a problem, and that was stressed yesterday also too by European leaders who say right now we need to coordinate better, because this is not really helping. One country is going into shutdown, the other one is trying to stay open as much as possible. So that is a concern indeed. It's different degrees of lockdown, but the virus nonetheless stays the same.
But Maria, at the same time, the freedom of movement was actually temporarily suspended last year because of health reasons, because of the pandemic. So would it no longer be the same?
Yes, and Francine, politically, this is a bombshell. You know, if you tell Europeans from now on your passport is not going to be able to get you freely, you know, where I sit here in Belgium, I'm not going to be able to go into Italy, France, Germany, the way I did before, that is a huge shock for the psyche of the Europeans. This is something that my generation, we've grown up with that. So that's why they're so careful with that. Not removing that freedom of movement really is fundamental. But again, that has been floated to some extent. They don't want to say ban. What they say is strengthen controls and checks and the borders. But again, if they do that, this is significantly, and it's very symbolic for a continent like Europe that prides itself on the fact that we don't really have borders.
Yeah, Maria, thank you so much. I'm not sure whether the shock of not being able to go from France to Italy is, you know, greater than actually not being able to go to a shop or actually leave your front door. Maria Tadeo there from Bloomberg Brussels, joining us with the very latest on the EU. Now, joining us to talk about COVID and to talk about vaccinations is Andrew Pekosh. He's Johns Hopkins Bloomberg School of Public Health professor and virologist. Dr. Pekosh, thank you for joining us. A number of questions on vaccinations, how quickly we can go, whether there's, you know, the first dose needs to be followed as prescribed by a second dose fairly quickly. What does the U.S. need right now?
I think the U.S. needs to scale up the ability to get, to be honest, needles into people's arms. The vaccine manufacturing seems to be on schedule in terms of generating enough vaccine, and each week there's more and more vaccine available. What we need to now focus on, after moving away from the high priority populations, is the mass vaccination campaign. And, you know, the Biden administration just made a few announcements that really will facilitate that. We need to make sure that people are getting their vaccine. We need to make sure that they get them on the prescribed dose, because we know the prescribed dosing will give us that 90 to 95% protection rate that will really make an impact come the fall in terms of the COVID-19 pandemic.
How critical is the J&J vaccine if it gets approved, because it's one single dose?
So the caveat is we still haven't seen the clinical efficacy data, but a single dose vaccine, and especially one that doesn't have that cold chain that the Moderna and the Pfizer vaccines require, will really improve our ability to vaccinate people. That will allow us to go to more remote places. It'll allow us to set up more vaccination centers because we won't have those limitations of having those very cold -70 °C freezers around to make sure that the vaccine is stored appropriately before giving it. So I'm looking forward to seeing that data, because it will dramatically improve the vaccination campaign if it's efficacious.
Andrew, I know it's difficult. You need to look at charts, because you're basically competing with the number of people vaccinated, you know, to almost counter the number of infections and the number of people that end up in hospital. Is there a magic number? Do you have to get, you know, this many people vaccinated in this number of days to try and beat this?
Yeah, the models that are based on the older lineages, not the new variants, would suggest that somewhere in the range of 70 to 75% of the adult population needs to be vaccinated to make a really significant impact on the spread of SARS-CoV-2. I know modelers are working now to see how these new variants that may have increased transmission would play into that. But I still think that that's a great goal. 70% of the adult population, if we can do that by September, then we'll be really set to make an incredibly important impact on the spread of this virus come the next fall, winter season.
Dr. Pekosh, do we have any figures of, once you get that first Pfizer vaccine, how immune are you to it before you get the second dose?
Yeah, so the clinical trial suggests that there's an efficacy of about 50% after the first dose. The immune responses are there in a majority of people, but they're significantly lower than after the booster dose. And that's important from a virology standpoint because we really want to get people to a high level of immunity as fast as possible. When you have a large population with moderate amounts of immunity, that's usually a recipe for the virus to be able to have variants emerge that are resistant to those antibodies. So we want to move from low immunity to high immunity as soon as possible. And I think that's what the Pfizer and Moderna vaccine schedules really allow us to do.
We saw a very different Anthony Fauci yesterday, saying he was almost relieved that now the administration trusts and listens to the scientists. Do U.S. citizens follow that and trust scientists more and get vaccinated more?
I hope so. Certainly the numbers that have been that I've seen about vaccine acceptance have been increasing lately. I think that this new administration with a new focus on emphasizing the science, bringing the science forward, following the science, and to be honest, the leadership that reminds everybody of all the things that we're supposed to be doing to limit the spread is actually quite invigorating. And it's refreshing to see that attitude, even though it's only been a few days since the new administration has taken place. So I see a lot of good things on the future. I love the executive orders that are going out because they take care of the short, medium, and long-term needs to control this pandemic. And I think that we're now going to be moving forward into a new phase where we can really get better control of this and allow ourselves to come back to some more normal semblance of living in a few months.
Andrew Pekos, thank you so much. He's, of course, of Johns Hopkins, and be sure to check out VRUS Go on the Bloomberg for the latest information. You can also tune in every day for exclusive conversations with Johns Hopkins experts for an inside look at battling COVID-19. Now, coming up, Patrick Foy, MTA Chairman and Chief Executive. That interview, don't miss it. It's at 8:30 a.m. in New York, 1:30 p.m. in London, and this is Bloomberg.